Right now, inflation's job number one.
Data is coming a little bit softer, but I don't think Fed is pivoting here. I don't think the market is pivoting.
Investors should recognize that there's been a lot of ups and downs in the economy in this quite fast-moving cycle.
We have to remember that the market already priced in a lot of damage.
A recession is still the most likely outcome here, and I think it's too early to be calling a bottom in equities.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Where did July go? Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowicz. I'm Jonathan Ferro. Futures negative 0.2% on the S&P. TK, what a rally through the month of July.
It really is. We start strong with Ben Laidler, who's really going to give us a tone here against the Bears. And the Bears, John, as you know, reaffirming. I thought Mike Wilson's note with Morgan Stanley was fascinating, John. He reaffirms in a slowdown, guess what? At some point, the earnings view declines.
And the downgrade should come through fast, Tom, in a recession. That's his whole point of view. At the moment, though, we can dream, to use his words, and we are dreaming, aren't we, TK? Going into the data, payrolls this week, CPI next week.
Dream of a better future, and it's going to be a data-dependent Fed. Forward guidance out the window, so every data point matters, John, and we're going to see that. Payrolls, you got to pay attention there. Will the labor economy break?
Every Fed speech matters right now. And Lisa, over the weekend, Neil Kashkari of the Minneapolis Fed spoke twice, pushed back against this euphoria that somehow this Fed pause is coming sometime soon.
And we're going to expect a lot more of that. We heard a tentative or more tentative kind of tone out of Raphael Bostic on Friday. This really is the key pushback that Fed Chair Jay Powell said that we are close to neutral. We are getting closer to getting that rate closer to where it needs to be for this economy. I'm looking at the real yield on two-year bonds right now. It is negative 0.3%. We still have negative real yields in the United States at the front end at a time when you've got the fastest pace of inflation going back for 40 years.
Real yields, they topped 2 days before the equity market bottomed, June 14th. It's been the story, hasn't it? As soon as that started to fade, we started to kick higher much more aggressively in this equity market.
This is the conundrum in my view. We have had earnings in some cases that are better than expected. However, how much does that even matter when it's all about the Fed, all about restrictive rates, and where we are in a cycle?
It's not. It's about corporations adapting and adjusting. And, John, that's what we've seen in the last 6 weeks.
Brahma's got things to say, Tom.
I don't agree with this. It's all about economic stuff. It's about corporations adapting and adjusting, given the slowdown, given the end of the pandemic.
And I'm sorry, but John, we will get on with the show and do price action. But Tom, how much are we looking at, yes, earnings, but at the same time, the greatest rewriting of where we are in terms of Fed policy going back for years? That is what we've gotten over the past month in terms of the rally.
There's no question about it, and it deserves a road trip this August out to Wyoming.
We are going on a road trip this August at Wyoming. That's actually happening, Tom. That's one of the few things you've asked to happen that will actually happen.
Really?
Should we get a look at the price action?
ECB's after
Let's do that right now.
Let's do that right
Negative 0.2 on the S&P. On the Nasdaq 100, we're down by 0.2% as well. Yields coming up about a basis point to 265.77. Larry Summers with David Weston over the weekend. Jay Powell said things that, Lisa, to be blunt, were analytically indefensible. What a quote.
And how much is that talking exactly about where we are in terms of close to neutral? Because that has been the biggest pushback. Bill Dudley categorically disagreed with that. That has been an area where people say you gave a dovish message to a market that was hungry for one, and you are totally mistaken in doing so. As far as where the economy is, we're going to get a lot of data this week that's going to give us some insight, including at 10 a.m. U.S. July ISM manufacturing. We're also getting June construction spending, but the manufacturing is going to be really interesting, especially after that Chinese data overnight that showed an unexpected contraction in the factory outputs. How much do we see an ongoing grind, an ongoing withdrawal from a sector that has been on fire since the pandemic? And how much does this bleed into some of the expectations for a downturn globally? Today, House Speaker Nancy Pelosi begins her Asia tour. She will be in Singapore. The big question, of course, is Taiwan. Will she be going there? There are a whole host of other nations. She hasn't put it on the list. How much is this going to be a flashpoint, an unnecessary one that continues to really put her and, frankly, the Democratic Party in a real bind at a time when Joe Biden is trying to celebrate a legislative win? And today we do have an earnings continuation after 56% of the S&P have already reported. We get, of course, Zoom info as well as Avis budget, but I'm watching the shale space. Devon Energy, Williams and Company, and Transocean all reporting earnings after the bell. There is an expectation, John, for the shale players to report record profits, possibly recapping some of the decades of losses that they've been incurring. How much does that really restart some of the production versus just simply paying back debt and really being prudent and just cashing in at a time when oil prices are as high as they are?
Very cool. Lisa, the day ahead, the week ahead gets bigger as we climax with payrolls Friday later this week. We just got this in from Bill Dudley, the former New York Fed president, publishing on Bloomberg Opinion. Investors have lately become strangely optimistic that the Federal Reserve won't have to tighten monetary policy much further. He goes on to say, Tom, this wishful thinking is both unfounded and counterproductive.
It's a short, sharp note. It's a good summary. It's a particularly good summary, John, for those that disagree with Dr. Dudley. I mean, there's a whole school of thought out there that this is a Fed that can, thread the needle's a cliche. He says there's no threading of the needle. This is what they have to do. Inflation is the priority.
Looking forward to catching up with Bill maybe later this week. Let's catch up with Ben Laidler, global market strategist at eToro. Ben, best month of gains we've had on the S&P going back to November 2020. Ben, we all want to know your view. Is this the real deal?
We've seen a classic sort of climbing the wall of worry, right? I mean, we had a terrible June. Sentiment got super bearish. Everyone was freaking out about, an earnings collapse, a consumer collapse. And hey, guess what? It hasn't happened. That's not to say it's not going to happen. We're still in this race between a peak in inflation and what will probably be a mild recession if it happens. I do think the bottom is in. I think the question is still out there as to the sustainability of this recovery. A lot of that is going to depend on how quickly inflation starts to come down in the next couple of months. Those lead indicators, those commodity prices, those inflation break-evens say that we're at the cusp of that. But that's really the question that's going to determine the sustainability here.
Ben, I went back and I looked at December of 2018 when Ben Laidler at HSBC made one of the all-time great calls on the equity market. Then there were 6, 7, 8 reasons not to be in the market. Forget about 6, 7, 8 reasons. What's the key reason now to be in the market versus the 47 ideas of gloom that we've got this morning?
Markets are forward-looking, right? That's what we always forget. That's what we forgot back in 2018. That's what we forgot at the sort of March low in 2020. Wall Street is not Main Street. We're looking 6 to 12 months ahead. We're looking to the top of this Fed cycle. We're looking to potentially some interest rate cuts. We're looking essentially to the consumer and the corporates outlasting this inflation scare. Now, again, there are risks around that. But if we see inflation peaking in the next couple of months and beginning to come down, I think markets are going to keep moving ahead of that. Earnings, we've had 0.5% off 2022 earnings expectations in the last month. This is not capitulation. Now, we're halfway through earnings. We'll see. But the story right now is the consumer, corporates being very, very resilient. And if inflation does peak in the next couple of months, as those lead indicators tell you, I think to borrow the hackneyed phrase, I think we could thread the needle.
Ben, I'd love you to weigh in on the Monday morning tiff that Tom and I were having about whether this is more about macro or more about companies being able to adapt and adjust to the realities that they face. Which is the more important factor right now to understand, yes, perhaps the bottom is in, as you said, but just how much more pain from here we could see or whether we trade sideways? Is it going to be inflation rolling over, the Fed communication, or is it going to be just the individual companies and what they report?
There's only 2 ways to make money in markets. It's valuations, which have been absolutely crushed this year, which has been all about inflation, the Fed, discount rate, the bond yields, and earnings, which have been absolutely rock solid, down 0.5% for the 2022 expectations in the last month or so. If those numbers keep hanging tough, as I think they're going to, then we survive. But your average recession, those earnings come off 20%. So that's your downside. That's a shoe that hasn't dropped yet. That's what the market is, was very afraid about, coming into second quarter earnings, and that's been the relief so far. Now what we're looking for is, can that relief continue? And I think that does need the macro. That needs the inflation fears to cool, and that leads a validation of this expectation that the Fed takes its foot off the pedal. So,
Ben, I think this is the word that's in the Dudley column today that jumps off the page to me. Counterproductive. Is this rally at this point, this easing of financial conditions, counterproductive and something this Fed needs to push back against?
Yeah, the Fed hates this, right? I mean, the market was doing their job for them. It was tightening financial conditions, mortgage rates were going up, et cetera, et cetera. That's all reversed in the last sort of month or so. So I would fully expect every Fed governor worth his salt to be out there trying to talk this market down. And yeah, hey, we should probably see it, right? I mean, but I do think the bottom is in. I do think there's more upside than downside. This is a U-shaped recovery. We're going to bounce around until we get the validation that inflation is coming down. Then I think we're going to grind higher. I don't think this is a V. This is a U. But I do think the bottom is in here.
Hey, Ben, great to catch up, sir. As always, Ben Laidler there of eToro. Just continuing to read this column from Bill Dudley this morning, Tom. All told, the outlook hasn't changed. Inflation is too high, the labour market is too tight, and the Fed must respond, most likely by pushing the economy into an actual recession.
And to Jobs Day on Friday, I mean, John, it's No News Monday. Let's be honest. Folks, it's No News Monday. It's the summer. We've broken the heat wave on the East Coast. We're all feeling better about it. I actually got below 59th Street this weekend, John.
Congrats, Tom.
I thought, the statue outside Rockefeller Center almost started shaking.
That's how far down you got.
Yeah, well, I got to, near Saks. But anyways, John, Friday's a big deal. It's No News Monday, I get it. But Friday is a serious, serious jobs report, and that's what matters to Dr. Dudley. The idea, does the labor market crack, or do we get wage inflation? And that's the fear overlaying the need to get back to 2-ish%.
One thing we're looking for, Lisa, on Friday is just a step down in payrolls growth, just a slight deceleration, something in and around the 200s.
That's going to be the most important figure of the week. And initial jobless claims of increasing importance because that seems to be the data point that this Federal Reserve is most keyed into, because that was the one that they highlighted was still resilient and sort of the reason why they could continue to raise rates as quickly as they previously wanted to.
I'm looking for the manufacturing data a little bit later this morning.
Looking forward to that.
In America.
John,
PMIs out of China, Tom. They were not pretty.
They weren't. But explain this, John, because there's a lot of people that are like, what's he talking about? Why does that data this morning matter?
This morning, last week, or rather 2 weeks ago, I think it was, we had a negative sub-50 PMI manufacturing. We need to look out for the ISM to see if it confirms that, or rather that was services, Tom. So services later this week,
John.
Manufacturing today.
Crystal Palace, Arsenal,
I knew you wanted to do that. I knew you wanted to do that.
It's so much better than in America. They just start playing.
They do. Next weekend, the league begins. And congratulations to the Women's England football team, Tom. If you're going to bring up sport, you've got to go there.
Yeah.
For winning the European Championships. We've got to go. We're down 2/10 on the S&P. We're down 9 points.
Road trip.
This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Rita Gupta. The architect of the Democrats' tax, climate and drugs bill, Senator Joe Manchin, is lobbying colleague Kristen Sinema to get on board. Manchin argues that the measure does not raise taxes. Sinema has not divulged whether she will indeed support the bill or not. She has the power to sink it. China's economic rebound remains fragile. Factory activity unexpectedly contracted in July. Meanwhile, property sales from top developers continue to shrink. Sporadic COVID outbreaks have led to more government restrictions hampering the economy. And the Bank of England is expected to step up its fight against inflation in the coming week. On Thursday, it's likely to join some 70 other central banks in raising interest rates by a 0.5 percentage point. That would be the UK's biggest rate hike in about 27 years. And shares of HSBC are rising. Second quarter earnings were better than expected, and the bank promised to resume paying quarterly dividends next year. HSBC is pushing back against a call by its largest shareholder, China's Ping An Insurance, to split up. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rita Gupta. This is Bloomberg.
Season is here.
Everything I've read has just got the R word. Resilience, not recession.
Earnings are expected to be so weak that I think that presents a very intriguing opportunity.
Bloomberg breaks the numbers first.
We get a deluge of earnings globally this week from Alphabet and Microsoft.
With exclusive expert analysis.
These earnings have proved to be really inconsistent, not actually showing a real picture that goes one way or another.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
We're going going to do everything we can to try to avoid a recession, but we are committed to bringing inflation down, and we are going to do what we need to do. And we are a long way away from achieving an economy that is back at 2% inflation, and that's where we need to get to.
Neil Kashkari there, the Minneapolis Fed president on CBS over the weekend. Amazing that every single Fed watcher, dedicated Fed watcher, is basically saying the same thing, that this Fed has to push back against some of this price action. Futures right now, negative, softer, down 0.2% on the S&P after a really strong rally after the last month on both the S&P and the Nasdaq too. The Nasdaq just a little lighter, softer, lower, down 0.2%. Tom, yields up about a basis point, 265.59. There is some dollar weakness out there.
Yeah.
Euro dollar, middle of the pack in G10, positive a third of 1%, 102.57.
On DXY from 107, 108 down to 105. So there is finally a real dollar weakness. You don't see it in some of the EM currencies, but nevertheless an interesting tape and becoming more interesting off the economic data John mentioned that we'll see here on August 1. It is August 1 in Singapore. It is the evening. Of course, they are through their day. Anne-Marie Horton knows this, our Bloomberg Washington correspondent, because there is the reality of the Speaker of the House, the travel plans of her and her contingent, and also the United States Navy. The 7th Fleet is in the Indo-Pacific area, led by the USS Reagan, the Benfold. The Tippecanoe is an oil kind of ship that refuels at sea. Anne-Marie Horton, how is the United States Navy helping Speaker Pelosi on her trip?
Well, the question is whether or not they're going to be needed to help her, right? And the question is whether or not the speaker will go to Taiwan. Overnight, Kyodo News in Japan is citing Taiwanese media that says that Speaker Pelosi is set to visit and travel there tomorrow evening. Of course, we have not heard that from the speaker's office. They released a statement over the weekend detailing the itinerary of this trip. Singapore was on it, Japan was on it, South Korea was on it, but there was no mention of Taiwan. And again, the foreign ministry in China was asked about this, and they said they would not sit idly by. So it has become a quite tense moment if the speaker was going to Taiwan. And obviously there's political risks for both Beijing and Washington.
The niceties of this, Anne-Marie, and James Stavridis and Elliot Ackerman have this in my book of the summer last year, 2034. It is about geography. Taiwan is 245 miles long, and the niceties of this is, do the U.S. ships go up the west coast, the populated side of Taiwan, or do they go outside to the east side of Taiwan? Is the speaker aware of how the Pentagon is having to adapt to her plans?
Well, the president was pretty frank when reporters asked him about this, and he said the military doesn't think it's a good idea for Speaker Pelosi to
Can
go
they
right now.
overrule her, Anne-Marie? Can they overrule her?
The White House can't. The White House cannot. The White House says this is the speaker's prerogative, her travel plans, right? But obviously she's going to be in touch with the military, right? It's escorting her if she was to go there on this trip. And they're going to do everything they can when there's high-level individuals from United States officials traveling around the world. They are always involved. One thing is, of course, interesting. Over the past year or so, there have been more incursions into Taiwanese defense space. There has been more intercepts. The FT had an interview with General Milley talking about this. There's also, of course, been the fact that the Chinese military is now saying that the Taiwan Strait is not international waters. Yeah. This potentially speaking to your point, Tom, of which way the Navy goes.
Anne-Marie, there have been reports about how much the Chinese military has been built up over the past decade, in particular their Air Force, and that it's unclear that Taiwan, and even aided by the U.S., could win if China decided to invade and to grab that land and the sovereignty therein. How much is this weighing on Taiwan in terms of whether they actually want Nancy Pelosi to come?
Right. Well, I think for Taiwan, Speaker Pelosi would be a huge testament and statement to what many in Taiwan want, which is independence. But you bring up a point of, I don't think there's many people that want to see another massive conflict already when the world is dealing with Russia's invasion of Ukraine. When it comes to Taiwan, of course, this whole year we've seen the White House make statements, or the president make statements, and the White House have to walk it back, most notably in May when he was in Asia, saying they would defend Taiwan, they would send weapons to Taiwan. Some of that had to be walked back. it comes at a really critical time because it's difficult for Xi Jinping in this moment to potentially not make some sort of dramatic movement. He's pushed a little bit by nationalists. He's suffering economically, domestically. And of course, in 3 months' time, he's going to get this president-breaking third term. So this is really a critical moment for him. And a lot of this could be deflecting, but it does risk potential errors.
Anne-Marie, AMH down in DC. Anne-Marie, thank you. We caught up with Isaac Boltanski last week on this, Tom, and he just said, lose-lose. The guy over at BTIG, the team there, Tom, just calls it lose-lose right now. Whatever decision that the speaker makes, it's a lose-lose situation.
I've sort of always felt, John, over the years, and this goes back to all the tensions, even before Nixon, Kissinger, that it is so far removed, so complex, and so unknowable that she's intruding in this around maximum uncertainty. And that's the only thing I can say. There's so many different levels of uncertainty.
Well, I think the number one thing we've got to do this week, Tom, is not just talk about the foreign policy. We have to talk about what's happening domestically in China at the same time. Lisa, there are others that believe, in fact, many people who believe that President Xi is doubling down on tension abroad because of what's happening at home. And what's happening at home is not a great situation for the Chinese president. Manufacturing over the weekend was sub 50 on the official PMI. That's contraction. We've heard of this so-called mortgage boycott spreading. That's a tough situation. COVID zero. In China, we're living in 2020 and it's 2022. There are many, many things domestically that are putting this leader under pressure.
Especially because just talking about the factory output, that was the official data, which usually is massaged. The fact that they're acknowledging a contraction there is telling when it comes to the mortgage crisis and the mortgage issue that China is facing. They are looking at about a third of the overall debt attached to these housing, to the homes actually being non-performing and problematic. This is becoming a serious issue for their banks. This is becoming a serious issue for their economy. People are really struggling to understand how China's going to address this.
So, Tom, when we think about the instability abroad, we have to think about just how stable things are at home for this leader.
Elizabeth Economy's been out front on this, John. I mean, I can't say enough about Liz Economy's at work in her book, The Third Revolution. He's far more fragile than the homogenous view that we see him by. And, of course, this goes into the November meetings of the party.
We'll follow the plane through the week, as I'm sure many of you will. Ed Morse is going to join us a little bit later, the global head of commodities research over at Citi. He was looking for a move lower on crude. We got it. He's potentially looking for a bigger move than this one. 96.90 on WTI. We're down by 1.74%. From New York, this is Bloomberg. Live from New York City this morning. Good morning. Equity futures slightly negative, down 0.2% on the S&P. On the Nasdaq 100, down about 0.25%. Massive month of gains last month. The S&P 500 with its biggest month of gains going back to November 2020. Big month for the market, not so great month for the economic data, leading some of you to price in potentially a slower Fed, reinforced supposedly by the communication we got from Chairman Powell last week. And this is what it means for the bond market. 2s, 10s and 30s for a second straight week last week. Two-year yields declined this morning, up about a basis point to 289.85, even with Neil Kashkari over the weekend, the Fed president from Minneapolis, pushing back against this idea that the Fed might be done sometime soon. He's not alone. Others will follow. How will this bond market respond? I can tell you how foreign exchange is responding right now. Based on the developments of what's happened in the bond market, push it through FX, and euro-dollar looks a little something like that. We've had 4 straight days of dollar weakness now in the dollar index. Euro-dollar positive by 1/3%, Tom, to 102.57. And the euro is not alone. The yen's looking stronger. The euro's looking stronger. Pretty much everything in G10 is stronger against the weaker dollar this morning.
Some of the cross rates are interesting. Euro-Swissy really doesn't give it up. It is a little bit weaker Swiss, but to watch the mix there, I think, John, is important. John, I know the big equity market. I just want to report that the variance on the triple leveraged all cash fund was, unched.
Have you dabbled, Tom? Have you thought about maybe rotating out of cash?
I looked at it.
I
had the buy side ticket out. I walk around, folks, after the show with sell tickets here and buy tickets here, like the wonderful Ace Greenberg, and I couldn't pull the trigger.
That's the end of the bear market rally, Tom, when that starts.
June 18th.
We're all waiting for it. We're all waiting for it.
Couldn't do it. Futures -9 and the VIX off the 21 level, 22.32. This is a joy. Edward Morris defines a global oil analysis. He's head of commodities research at Citigroup. Let's get right to it. Ed Morris, I want to talk about demand responsiveness or demand elasticity nation to nation. Is the demand dynamics of less demand in the United States the same as the demand dynamics, say, in Germany or Singapore?
Absolutely. European economic conditions are worse than they are in the U.S. Compound that with the higher price, and yes, we're not seeing any demand growth in Europe. We're not seeing very much demand growth around the world. It's just prices are too high, and even though they've come off, the gasoline prices have come off, the continued strength of the dollar, even though, as you noted, it's weakening, and just this sheer high price is deterring people from using the car as much as they were in the past.
Do you assume out of the bulls, and you've been right in the last number of months, Ed Morse, do you assume that demand clicks in if COVID is solved in Asia?
Well, certainly there's one level where demand will absolutely kick in, and that's jet fuel demand. China is a very large user of jet fuel. They've shut down international travel, so they're down about 1 million barrels a day from where they've been just on the jet fuel side. So yes, we do expect a year from now, all else equal, so we're going to see significantly more jet fuel demand. We don't see that happening, by the way, in the other transportation fuels. We think gasoline and diesel are likely to remain weak unless there, for some reason, is going to be a rebirth of global trade and some shot in the arm to get people driving again.
If this is the case, Ed, why are we not seeing inventories build more?
Well, we are seeing inventories build. The problem is they've been at such a low level. That's one of the problems. The other problem is that when we look back at the second quarter, there was a good inventory build, but most of it took place in China. We had a month and a half in which real demand was down about 1 million barrels a day, a little bit more. And we had inventories building because there was another 1 million barrels a day of imports coming out of taking advantage of the low price of Russian crude and actually stock building. We had a lot of imports of Saudi crude, up around 700,000 barrels a day alone, one month after the other. So the inventory build in Q2 was just unevenly distributed. We're seeing actually an inventory build west of Suez right now. We're just not seeing it in the U.S. The U.S. is in this bizarre position of being not one market, but 3 or 4 different markets. We are an open market. We can't export other than by pipeline. And I use the word export euphemistically. We can't export from the Gulf Coast to the East Coast. We can export to Europe and other places. The turning away from Russia by European countries and companies have had them turning to the United States. Last week, the data from the EIA had U.S. exports at a record high of 10.9 million barrels a day growth, 10.9 million of including well over 4 million barrels a day of crude oil. So we're having the kind of discontinuities in the market, pulling oil out of the U.S., going into other parts of the world. But there definitely is weakness on the inventory side. And we're seeing that in the level of backwardation. Prices have gone down. Prompt prices are going down when it comes to crude at a faster rate than deferred prices. The difference between the prompt month and the second month is narrowing. And we're seeing flows coming out of commodities. The liquidity of the market is low, and it's getting lower as people are abandoning commodities for other assets at the moment.
One of the reasons why the oil picture has been so complicated, Ed, is because of how much it does hinge on the zero COVID policy in China, how much it hinges on whether that Russian oil can actually move around more consistently or actually not at all, whether it's restricted more. How much do you change your parameters? How much do you change what your base case is for the price if, say, China does reopen, or if we do get some sort of continuing of a steadying in the global economy?
Well, we do have that as a contingency. We think the bigger risk on the upside at the moment is not a change in the economic situation globally, but rather we understand the fragility of exports in some countries. It's not just Libya, which has gone up, by the way, by 700,000 or 800,000 barrels a day in the last couple of weeks. How long will that last is a bearish factor in the market. Will we be seeing disruptions to supply there again? Also in Nigeria, We're noticing that Iraq has not yet had a government since the elections of last October. We've had the Parliament House occupied twice by protesters worrying about a government that's going to be too close to Iran. The likelihood of disruption risk in both Iran and Iraq is not exactly zero. So there are bullish factors that are hanging over the market.
Ed, I don't want to catch you unawares on this, and if Citigroup has a banking relationship, please speak up, and I apologize. Moments ago, we have a headline that Aramco will take out the global products division of Valvoline. Folks, Ed Morris and I are the only ones in financial media that actually used a can of Valvoline in the first car we were allowed ever to do an oil change in. There's a romance here of the troops from Lexington, Kentucky. Discuss, Ed, the synergies of a giant like Aramco with something that's so absolutely iconic in America.
I can't speak to the synergies. I can speak to a company that, as my own colleagues who report on Aramco have noted, is awash in cash and is under pressure to spend it. And there are market niches that are highly profitable that companies like that go after. So without speaking to this iconic issue, I think it just has to do with what the extraordinary cash flow and cash position of that company is, looking for good investments to make.
And do you see this to continue across all of big oil? I mean, we think of Exxon and XTO, but is this the future of an oil awash in cash?
Well, the question is, how long will oil companies be awash in cash? We've had very unusual crack spreads at the moment. A significant amount of that profitability doesn't come from the price of oil itself. It comes from other things in the market, and particularly the strength of the product markets. The strength of the product markets is very unusual. China has a massive role to play in it. China, as I noted earlier, was building inventory. They're not only building inventory, but at the same time, they've cut out exports of product, and particularly diesel. A year ago, they were exporting 700,000 barrels a day of diesel. It's now zero.
Yeah.
That 700,000 barrels a day, if it were in the market, and if there were some other adjustments, would bring those cracks in the refinery margins, the profitability of refining down significantly.
Ed, before we let you go, what's your base case for how low oil prices could go in the next 6 months?
Well, our base case is for oil to continue to drift downward. It's seeing Brent in the mid-80s and WTI in the low 80s for year end, and then continuing on that path into the months of 2023.
Into the 80s, low 80s year end. Ed Morse City, thank you. Lisa, low 80s year end.
How much does that alleviate? Yeah, how much does that alleviate some of the pressure? I mean, we've seen steady drops in the price of gasoline. People have pointed to that and an increase in consumer sentiment, which we saw on Friday. How much does that continue to edify this bullishness that we're seeing, that the Fed's going to be able to move away, that inflation data is going to roll over? This has been really one of the linchpins for some of the recent optimism.
We've been looking for the pullback in headline year-over-year inflation for the last couple of months. We've been talking about peak, mechanical peak, year-over-year inflation. Then it kept climbing and we got a 9 handle. This time around next week, we're looking for that again. Tom, the focus, as you know, though, is on core month over month, and what we're seeing happen in rents at the moment and how stickier, how much more broader this story has gotten over the last few months is concerning for a lot of people.
That was the number one thing, John, I focused on before I went on Halls, and I'll just tell you that to me the rent dynamic is the most important mix there of core, non-core, Dallas trim, and the rest.
How was the long weekend, Tom?
It was exhausting. I mean, you take that amount of time off.
A single day.
You really don't. It doesn't really click in. The stress doesn't fall away until something in the vicinity of cocktail hour.
You've adopted the word holds, Tom, but not the full culture of the UK and
that was an
vacations
American
in Europe.
Halls there, John. I took a day off.
A 3-day weekend into the summer, Tom. Impressive. Futures on the S&P, down 0.2% on the Nasdaq 100. We're down about 0.25%, pulling back from a pretty tasty rally over the last month. What a move we've had on the S&P, the biggest month again since November 2020. Quite a rally off the June 16th lows on the Nasdaq 100 too. Yields higher by a single basis point. Your 10-year 265.77. A lot of data coming up this week. Good morning to you. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Rishika Gupta. China has again warned that its military would take action if House Speaker Nancy Pelosi makes a landmark visit to Taiwan. A spokesman said the People Liberation Army, quote, won't sit idly by if Pelosi travels to the island. She's currently in Singapore. Pelosi's itinerary did not list Taiwan as a stop. And President Biden is isolating at the White House after testing positive again for COVID. He has a so-called rebound case that's seen in people who take the antiviral drug Paxlovid. The White House says the president is not experiencing any symptoms. And in eastern Kentucky, the death toll from massive flooding has now risen to 28, and the state says more fatalities are expected. Rescue and recovery efforts were slowed Sunday by up to 4 more inches of rain. About 400 people have been rescued by National Guard helicopters. And Lufthansa could face more turmoil. Pilots at the German airline have voted for strikes if they're considered necessary to get a new wage deal. That could lead to another round of flight cancellations. Walkouts could take place this month, which is one of the busiest for the European travel sector. And shares of HSBC are rising. Second quarter earnings were better than expected, and the bank promised to resume paying quarterly dividends next year. HSBC is pushing back against a call by its largest shareholder, China's Ping An Insurance, to split up. And Bill Russell is being remembered as the greatest winner in the history of basketball. The Hall of Famer died Sunday. Russell won 11 NBA titles in 13 seasons. He also won 2 NCAA titles at the University of San Francisco and an Olympic gold medal. Bill Russell was 88. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
I think Jay Powell said things that, to be blunt, were analytically indefensible. There is no conceivable way that a 2.5% interest rate in an economy inflating like this is anywhere near neutral.
Was that the diplomatic version of Larry Summers there? Larry Summers, the former U.S. Treasury Secretary,
speaking
to
better
David
behavior with Weston than he is with me.
On Wall Street Week over the weekend. He was pretty blunt. Yeah. Let's be blunt about that.
That's not
Futures
diplomatic.
down 0.2% on the S&P. On the Nasdaq 100, down 0.25%. Yields higher about a basis point, 265.95. Got a ton of economic data this week. It concludes with payrolls on Friday. Next week, August 10th, we get CPI in America. We have to talk about foreign policy too. A lot of people wondering whether the Speaker of the House will go to Taiwan. CNN reporting the following. Here's the lead paragraph. U.S. House Speaker Nancy Pelosi is expected to visit Taiwan as part of their tour of Asia, Tom, according to a senior Taiwanese government official and a U.S. official. I stress that is CNN reporting, Tom, and that's the latest I've seen.
1,900 miles from Singapore up to Taiwan, and to give us perspective, we rip up the script. We were going to speak of Europe with Tina Fordham, geopolitical strategist and founder of Fordham Global Foresight. She has been fabulous with us over the Ukraine war. But Tina, I've got to turn to this. We talked with our Anne-Marie Horton about it earlier. The Pentagon has to adapt to this. With the USS Reagan and the 7th Fleet, it does harken back to Nimitz in a different time and place. But our big trap here is nostalgia or history. What is the new, what is the distinction in 2022 about China, the U.S., and Taiwan and Formosa?
The way that I look at this, Tom, is that one of the byproducts of the pandemic was that both China and Russia looked at the United States and Europe and really drew the conclusion that we had weakened and were open to testing our boundaries, right? Our willingness to defend Western longstanding security relationships and alliances. I think that the White House has been pretty bold in wanting to push back on Putin. We've seen this with the eventual move to arm Ukraine, and the same thing with Pelosi's apparent move to visit Taiwan. A lot of people will see it as a provocation, but from my own perspective, looking at geopolitics through a security lens in this case, Continuity and no daylight between the U.S. positions will be very important for reinforcing resolve.
With all of your abilities, Tina, does the U.S. have enough material, enough forces, enough military on the Pacific Rim?
Well, at the moment, to fight a conflict, I mean, that's a different question from what's happening here, which is the kind of diplomatic choreography of putting your money where your mouth is, right? So both sides have increased the number of patrols, exercises, and everything else, but the U.S. has a strong military presence in Asia. That hasn't changed, and it certainly hasn't changed as a result of the Ukraine conflict, right? The U.S. hasn't redeployed forces on that one.
Tina, we've been reporting all morning that China has warned that their military will not sit idly by as Nancy Pelosi does head to Taiwan if this report by CNN is in fact true. What do you expect their actions will be?
I think it'll be an intensification of what's been evidence for the last several months. I mean, in my view, this move from Nancy Pelosi comes because U.S. intelligence have been warning that they believe that China is closer to making a move on Taiwan, perhaps in the next 18 months, than it has been for some time. I think that will come as a surprise to a lot of investors who had believed that the war in Ukraine might prompt China to take a rest. It's why I say that the signals coming from Washington, from even the Supreme Court, about the strength of the United States resolve, the strength of U.S. democracy, are being watched very closely to see if indeed Washington can respond to numerous threats.
Given the military buildup and given the fact that China has invested quite a bit in its military, how much does the U.S. view that China as having a more advanced, a more complicated role, and a more difficult opponent if there is an altercation versus a weakened Xi Jinping in light of some of the domestic challenges?
I think that there is a big distance to travel between sort of telegraphing to China that the U.S. is ready to defend its longstanding positions and that it's willing to engage in state-to-state conflict. Neither side wants to do that. That is clear. But we should go back to first principles. China has always wanted to be the regional hegemon and has objected to the U.S. military presence. And the U.S. going back, over a century, has said it doesn't accept the notion of regional hegemons to start with. And that's what both Russia and China have in common.
And Tina, just to put a bow on all of this, how did we get to this point? Where did this meeting come from, this potential visit from the speaker?
My understanding is that this trip was booked for before Nancy Pelosi had COVID. This is exactly the kind of sort of low-cost diplomatic option, though, that a government would engage in to do exactly what we've been talking about and reinforce the continuity of U.S. positions. So I see it as, frankly, an almost necessary move, because canceling it would have given the appearance that the U.S. is not willing to stand up to its own positions.
Tina Fordham of Fordham Global Foresight. Tina, thank you. We still don't know whether the Speaker of the House will actually visit Taiwan, Tom. On the public itinerary for the Speaker of the House, Nancy Pelosi, it wasn't on it. The latest reporting from CNN indicates it will happen, and I can only offer you the reporting from CNN this morning. She's expected to visit Taiwan as part of their tour of Asia, according to a senior Taiwanese government official and a US official. Tom, within this piece, they go on to say the Taiwanese official added that she is expected to stay in Taiwan overnight. It is unclear when exactly Pelosi will land in Taipei. So, Tom, that's the latest.
The symbolism of this is extraordinary, John, and it really, to me, goes full circle to Nixon-Kissinger, which was a profound shock. Let's envision Speaker Pelosi in some kind of moment in Taiwan. All of that will be massively choreographed, I'm sure. But, John, you made a joke earlier about visiting a semiconductor factory. I mean, whether it's a semiconductor factory or it's lunch in Taipei, the answer is this is an extraordinary moment. I thought Tina framed that beautifully.
Futures right now, Tom, down 0.2% on the S&P. On the Nasdaq 100, we're down about 0.25%, down 32 points. Shaping up as follows in the bond market after Neil Kashkari spoke over the weekend, pushing back against maybe this dovish interpretation of the Federal Reserve meeting last week. Yield shaping up as follows, up 2 basis points to 266.67, Tom, this morning.
Do speakers matter anymore if there's no forward guidance?
The Fed speakers matter because they're offering you their interpretation of the data, Tom, and what they have to do. This is about the reaction function, and I think this is the point where this Fed, maybe we're going to hear a little bit more about what they think of this market reaction.
We got
over
rid
the
of
last
forward
month.
guidance this weekend at the Keene House.
Right now, inflation's job number one.
Data is coming a little bit softer, but I don't think Fed is pivoting here. I don't think the market is pivoting.
Investors should recognize that there's been a lot of ups and downs in the economy in this quite fast-moving cycle.
We have to remember that the market already priced in a lot of damage.
A recession is still the most likely outcome here, and I think it's too early to be calling a bottom in equities.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Coming off the back of the biggest month of gains since November 2020. Live from New York City this morning. Good morning, good morning. For our audience worldwide, this is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowicz. I'm Jonathan Ferro. Futures down by 0.2% on the S&P. TK, big week ahead for economic data.
Huge week ahead, John. And what's interesting to me is not the jobs report on Friday, but when we get to your property, the real yield Friday afternoon, will we have a negative inflation-adjusted yield? That would be the first shock of August.
Real yields peaked on June 14th. The equity market, the Nasdaq, bottomed 2 days later on June 16th. Does this Fed have to put a little bit more weight back into this bond market?
Well, Ben Laidler alluded to that in the last hour. He's been one of the great bulls and says climb on board here as well. I don't think they can overthink that, John. I don't think, I don't know what Chairman Greenspan would say, but do we want a Fed really trying to manipulate the equity markets? I don't think that's productive.
Hasn't that been their job the last 10 years, Tom?
Well, Greenspan would say it's been their job the last 40 years.
Wishful thinking, the words of Bill Dundee this morning in Bloomberg Opinion, Lisa. The wishful thinking is both unfounded and counterproductive.
Okay, perhaps it's not the Fed's job to manipulate markets, but it is their job to use financial conditions as a tool to try to achieve the outcome that they want with respect to inflation. And that is decreased demand, and that is lower valuation. So yes, expect them to jawbone down prices, but will it work? When we've heard this before from different Fed officials, and unless it's from the Fed chair himself, unclear whether it will have the same effect on markets.
When it comes to the data, what's more important right now? This market seems to be focused on output and not inflation. The GDP numbers and maybe not the ECI last week. And Lisa, that seems to be the direction of travel at the moment.
There is a belief embedded in markets that the Fed already sees the potential of inflation rolling over and is going to adjust accordingly, and that they're going to adjust before that happens, which raises a question of whether it is counterproductive, in Bill Dudley's words, because we ends up prolonging this whole process, this chicken and egg kind of back and forth that's causing much of us to have a headache.
The rally makes it less likely that you can get a rally because they've got to push back. I think that's it. Anyway, futures down 0.2 on the S&P this morning. Good morning to you all. Bramo, annoyed. Futures on the Nasdaq down by 0.2%. Yields up by a couple of basis points. 260.649. There's some dollar weakness out there, I tell you that. Euro dollar positive 1/3%. Lisa, 102.52.
All right, if you want to be bearish, take a look at some of the manufacturing data, particularly out of China, also out of Europe. It has been bleak, particularly in China. The official data coming out showing a contraction in the factory output, and this actually was a surprise to a lot of people, despite the COVID zero. We get the latest read on the U.S. at 10 a.m. I do think it's important. Yes, it is a slower news day when it comes to economic data today than the rest of the week. Still, this is a linchpin in where we are in this cycle. Are we just seeing a rotation to services? Not really, because it's not going to services. We actually are seeing weak data there. Is this factory sector holding up despite some of the weakness that we're seeing in demand on the physical goods? Today, I am very much focused on the geopolitics here. We were just reporting earlier, John mentioned CNN has it that Nancy Pelosi is going to stop in Taiwan for a night on her trip in Asia. She is currently in Singapore on this trip. How much does this ignite some sort of altercation between China, between the U.S.? What does it mean when China's army comes out and says, we will not sit idly by if Nancy Pelosi does land in Taiwan? And today we do see a slew of earnings, including Avis Budget, Activision Blizzard, plus a slew of energy companies, particularly in the shale patch, Devon Energy, Williams companies, and others. How much do we see shale report record profits, and what do they do with them, John, as this becomes an increasingly political issue? Do they reinvest them? Do they just deliver them to shareholders that have been waiting with losses for a decade?
Exxon and Chevron were not shy about the buybacks last week.
Not at all.
At all. Lisa, thank you. What a move we've had in July. The biggest month of gains on the S&P going back to November 2020. Off the lows of June, the June 16th closing low on the Nasdaq 100, we have rallied more than 16%. Stuart Kaiser was waiting for that move. The head of equity derivatives research at UBS joins us right now. Stu, is it too early to take a victory lap for you?
Hey, I don't think there's any victory laps in these markets, John. But look, I think the big picture here is expectations just got so extremely low that it didn't take a whole lot to kind of surprise sentiment to the upside, especially given where positioning is. But yeah, I think any victory laps are short-lived these days.
I look, Stuart, at the move we've had. When you synthesize all of UBS research, can you say it is a bull market? Can you say, as we've heard from a number of other guests, optimistic guests like you, that it is a bottom?
Look, I think we do see some room for the market to continue to move higher in August. I don't think I'd call it a bull market.
How do you know when it's a bull market?
That's a great question. I think for us, we'd like to see some follow through. I think if you look at performance of the equity markets the last 5 months, winners have underperformed losers the following month for 5 consecutive months. So basically, people have been aggressively selling winners, and I think if we could see a little follow through in August, we probably see that as incrementally positive. But look, until the Fed seems comfortable that inflation's under control and they're willing to sort of back off a little bit of these hard landing outcomes, I think it's hard to really call for a bull market at this point.
Stuart, understanding technical versus fundamental underpinnings of the rally that we just saw, there was a story that caught my attention on Friday that quants sold a huge amount of their bearish positions. They had to close out over the past few weeks, and that was fueling the rally. How much is that the main factor that's really been driving a market that's been operating in thin liquidity and very uncertain economic outlooks?
Lisa, I think it's actually a pretty big part of it. If you look at the performance of high short interest stocks, they've rallied considerably in July, and I think that's evidence of what you've been seeing on the quant side. But I think that just speaks to a bigger picture, that positioning and sentiment had been so washed out that you got a relatively solid earnings season, certainly not as strong as we've seen the past couple, but a solid earnings season, and the Fed that just sort of stayed on script, so didn't provide an additional negative catalyst into the market, and that's hasn't, to your point, I don't think it's drawn a lot of new investors into the market, but I think it's scared a lot of the shorts out, and that's kind of what we've seen in July.
Stuart, your response to when we tried to give you a victory lap spoke volumes. It was just sort of this exhaustion from this whipsaw action that we've been seeing and the uncertainty. What's your compass when you try to get a gauge of what's to come? Is it the economic data? Is it the prognostications from Fed officials? Or is it the line-by-line reports that we're getting from a lot of companies as they report earnings?
I think right now it's the earnings side of it, just because expectations, especially from the more bearish side of the ledger, have been so negative on earnings. So I think about a 5% upside to EPS has really helped. In terms of the Fed, look, the Fed has a dual mandate, and their view, I think, has been that the tail risk on the inflation side of their mandate was so far off and so huge that they had to prioritize that. And they front-loaded hikes. And to their credit, market-based inflation expectations have come under control. What they've sacrificed there is they've sort of introduced a tail risk on the growth side of the market. So it's going to be that back and forth between how the Fed is managing, inflation risks in the face of declining growth. And I think the real challenge is going to be, if we see weakness in the labor market, how will the Fed's communication evolve? I think from their perspective right now, the tail risk on the growth side is smaller and further in the future. So they're going to prioritize inflation. As that growth tail risk gets closer, how does that communication evolve? So that's going to be, I think, the number one focus for us as we get through earnings is how the Fed communicates that balance.
Right. I'm asking for a friend, but for people that have missed the equity market completely, the few people that have actually completely missed the equity market, How do you begin to get on board? Do you plunge in? You have such an enthusiasm that you dive in, or is it the proverbial dollar cost average?
We're not in the diving camp at this point. I think if the Fed is focused on growth and is willing to allow hard landing outcomes, I think you need to enter this through higher quality, larger market cap type companies. And I think that's frankly why large cap tech has benefited, because they fall into that category. So for us, it's, I think you want to be careful legging in here. It's hard to recommend to buy value and cyclicals at a time when the Fed seems comfortable, causing a recession. And look, the investor conversation is not if there's a recession, right? It's when and how much. And if that's the case, I think you need to be pretty cautious about how you add risk at this point.
Stuart Kaiser, awesome to catch up with you, as always, here in New York City. Stu, thank you, sir. Looking ahead to the Fed speak tomorrow, we've got Evans, Mester, Bullard, Tom, all on deck, and I imagine we're going to get a ton of it this week from these guys.
I always want to hear from Dr. Mester. She's just so good on the acuity of the reaction functions, but you got to believe you want to hear from Mr. Bullard to see the urgency for a Fed to focus on inflation until they see disinflation.
Are they satisfied with how Chairman Powell's comments last week were received, Lisa, by this market?
The answer is no. What did Ben Laidler say? They hate this. The Fed hates this response. And I think that that's an accurate assessment based on everything we've heard. How do they then say the economy is doing okay, but you guys got it wrong? How do they dovetail that message without going too far, without losing credibility and being accurate to the goals of the Fed?
Inflation's at 9%. We've got work to do. Isn't that just the message?
But you know what? That's what Chair Powell said. It didn't work.
Chairman Powell was focused on the output data because that was the line of questioning. I caught up with someone over the weekend that reminded me of that, and I think it's important. The majority of the questions in the news conference were about this recession story. So he had to attack that line of questioning. We didn't actually ask much about inflation, how sticky, how broad this might be going into year end. Then he started to lean on this concept of neutral, which Larry Summers has come out with a bucket of freezing cold water and poured it all over. And Tom, I think that's where maybe you get some pushback in the coming weeks. Larry Summers' argument is a basic one, and I think it resonates with a lot of people. How can we be at neutral when inflation, Tom, is at 9%?
I looked at the inflation chart, John, adjusted back, I think, to 1914 this morning. They have that on the Bloomberg from the U.S. government. And we're in a unique position right now. It's much, much worse than what we saw with Volcker. And Summers is right about that. The depth of duration here really screams for action.
Looking ahead to payrolls Friday, the estimate so far, 250,000.
I didn't know that, really. That's the number?
The high is 300K from Credit Suisse. Morgan Stanley at 300K as well. Bank of America with Mike Gapin over there now looking for 275. 200 seems to be the ballpark figure that we're looking for, away from the 300s of the last month or so. Futures down 0.2% with Tom Keene, Lisa Abramowicz and Jonathan Ferro from New York City this morning. Good morning. Will the Speaker of the House visit Taiwan? The latest reporting from CNN suggests she might be. We'll catch up with AMH down in D.C. Up next.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. China has again warned that its military would take action if House Speaker Nancy Pelosi makes a landmark visit to Taiwan. A spokesman said the People Liberation Army, quote, won't sit idly by if Pelosi travels there. She's currently in Singapore. Pelosi's itinerary did not list Taiwan as a stop. The architect of the Democrats' tax, climate and drugs bill, Senator Joe Manchin, is lobbying colleague Kristen Sinema to get on board. Manchin argues that the measure does not raise taxes. Sinema has not divulged whether she will support the bill or not. She has the power to sink it. And the Bank of England is expected to step up its fight against inflation in the coming week. On Thursday, it's likely to join some other 70 central banks in raising interest rates by a 0.5 percentage point. That would be the UK's biggest rate hike in 27 years. And shares of HSBC are rising. Second quarter earnings were better than expected, and the bank promised to resume paying quarterly dividends next year. HSBC is pushing back against a call by its largest shareholder, China's Ping An Insurance, to split up. And Bill Russell is being remembered as the greatest winner in the history of basketball. The Hall of Famer died Sunday. Russell won 11 NBA titles in 13 seasons. He also won 2 NCAA titles at the University of San Francisco and an Olympic gold medal. Bill Russell was 88. Global News 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
earnings season is here.
Everything I've read has just got the R word. Resilience, not recession.
Earnings are expected to be so weak that I think that presents a very intriguing opportunity.
Bloomberg breaks the numbers first.
We get a deluge of earnings globally this week from Alphabet and Microsoft.
With exclusive expert analysis.
These earnings have proved to be really inconsistent, not actually showing a real picture that goes one way or another.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
This is fighting inflation. This is all about the absolute horrible position that people are in now because of the inflation cost, whether it be gasoline, whether it be food pricing, whether it be energy pricing. And it's around energy mostly it's driving these high inflation. This is going to take care of that because this is aggressively producing more energy to get more supply to get the prices down. That's what we're doing.
Senator Manchin over the weekend doing more TV than us, Tom. Every single morning show over the weekend with Senator Manchin of West Virginia on CBS. That was over the weekend. From New York City this morning. Good morning, Tom Keene, Lisa Abramowicz and Jonathan Ferro. Futures down just a touch. We're softer by a little more than 1/10%. No drama here in the market. We're down about 1/10 on the Nasdaq too. Drama potentially in Taiwan. The latest from CNN, if you're just tuning in, here's the lead paragraph from their team. U.S. House Speaker Nancy Pelosi is expected to visit Taiwan, Tom, as part of their tour of Asia, according to senior Taiwanese government official and a U.S. official as well.
It's fascinating. I think we've covered it really well this morning, and we'll continue to do that. Secretary Cohen, William Cohen of Maine, will be with us later here on Surveillance this morning. So right now we will digress. Anne-Marie Horton is watching the Pelosi story, our Bloomberg Washington correspondent. But Anne-Marie, with the Manchin attention that John just mentioned, I think we need to understand a woman who is a young girl, literally lived in an abandoned gas station, picked herself up with 3, 4, and 5 academic degrees, and holds court as a progressive yet moderate Democrat senator of Arizona. Who has to sell to the senator from Arizona, and what is she listening for from her colleague from West Virginia?
Well, I think Senator Manchin went out this weekend to make that case to her explicitly in some of these talk shows he was on of the weekend programming, talking about the fact that her agenda that she's been pushing for, even if she wasn't part of this small huddle, is reflected in this bill. He talked about the fact that she didn't want to raise taxes. He says that this doesn't raise taxes, this closes loopholes. He also really weighed into and leaned into the fact that this would give Medicare really the road to try to negotiate prices lower prescription drugs. This is something that she is very keen for. But we have not yet heard from her office, except for the fact when the bill came out that she said that they will not talk about until they read the text, and also the text needs to be scrubbed by the Senate parliamentarian to make sure there's no non-budgetary items in it. And until that happens, we may not know whether Kyrsten Sinema is a yes on this vote. And this is an issue. This is why you see a little bit of optimism, but cautious optimism from the White House, because they've got burned before, and they need every single senator to sign up for this, or it's not happening.
I mean, Arizona is maybe the one state, Anne-Marie, that I get most wrong. I get it's a Republican state. Good morning, AUH2O. But the answer is with a booming Phoenix, it's more Democratic. What is her local politics that affects this big national and Washington decision?
Yeah, and Arizona, Tom, key to bring up, because tomorrow they have a primary election, and this is really a fight for the Republican GOP, especially there. But we should note President Biden did win Arizona, really at the heart, though, of Trump's campaign, saying the election was stolen. Kyrsten Sinema has had a lot of blowback from progressives in Arizona. I mean, you've seen videos circulating on social media last summer when Build Back Better was really in the press, forcing her to sign up for this. But, as you say, she's very moderate and a bit more to the right when it comes to taxes. She does not want to see corporate taxes raised. She's also been against closing the loophole on carried interest.
Yeah.
So this is going to be potentially the key discussion to try to get her on the finish line.
Anne-Marie, I'm just focused on Joe Manchin. I think this is a fascinating story. He's always been sort of a waffling member of the Democratic Party, really getting some ire from some of the more progressive members of the team here. And you do see him being the front runner, even pushing back against a Wharton study that came out and said that this bill, Inflation Relief Bill Act of 2022, would increase marginally inflation to 2024 before reducing it on the margins. How much is this a surprise? What caused the about face for him?
And these are economists that Manchin has been in discussion with in the past. And on CNN, he said, I respectfully disagree. And he pointed to a lot of the investment that will go into the energy space. This is really key for him in West Virginia, especially things like pipelines for LNG. And he says that will end up bringing down prices. So that's why he views this as not inflationary. For Manchin, his team will say this is not a reversal. They've always been engaged. The reason why, he also was explaining why he kept it very small circle with Senator Schumer and only really a few others. I mean, this really sent shockwaves through Washington. Many people that are never really shocked at anything in politics were quite literally shocked that this deal was able to come to fruition. And he said he didn't bring other people in because for so many times he let members of his party down because he couldn't go as far as the progressives wanted him to. And he said we were able now to get a deal. It is not $3.5 trillion. It is $400 billion. And he thinks this is not about spending. This is about investment. But for him, he says it wasn't a reversal, even though he did say he wanted to wait for that next inflation print.
What a turnaround, Anne-Marie. The Democrats like Senator Manchin and Larry Summers all at the same time.
It's crazy.
When did that happen? AMH down in Washington.
100 days out from the midterms. That's when that happened.
Getting closer to those midterms, TK, a few months away.
Yeah, it's what it's all about, and you wonder how the president's going to react to it. It'll be fascinating to see, John, when Matthew has sound on Bloomberg Radio this afternoon, where we are. John, as we speak of Washington, can I note that the real yield will dip down through where it was on July 29th, and possibly will head for a negative statistic?
It's been fading,
about
Tom.
The time of one of your properties.
It's been fading. And your disagreement a little bit earlier with Lisa over what's been driving the equity market, I think we've all got to agree that real yields, where they topped on June 14th, that story and how it's faded over the last 6 weeks has been a big factor behind what's happened in this equity market rally. And a lot of that, Tom, is dependent on just the way the perception of what this Fed will or won't do has shifted over the last few weeks.
Oh, it depends also on, what we see in inflation. And part of inflation coming down is, within a broader sense, a demand destruction, as Ed Morse talked about with oil. And when the prices come up, demand slips away and down you go.
You've said it, though, Tom. Come down to what? From 9 to what? 8, 7, 6, 5?
Well, yeah, that's, we haven't discussed that today, but to me, that's the heart of it. And John, this goes to the important point. Is jobs more important Friday? I mean, today it's no news Monday. I get that. But is jobs more important Friday or August 10, I believe it is, the CPI report?
The labour market, I think, Tom, and Lisa, you can weigh in quickly here too, is going to be seen as to whether it keeps the light green on go, go, go for this Fed, and CPI is going to reinforce that potentially next week as well.
If the labor market comes in hotter than expected, that could actually really spur the markets in the opposite direction, expecting those higher Fed rate hikes. Honestly, Tom, John says it, you don't disagree. I say it, you do. So,
it's ISM Monday.
Period.
It's
What?
ISM Monday. Is that what you're calling it?
100%.
God, there's the...
Let's whip through this price action for you. From New York City this morning, good morning. After a massive month of gains on the S&P, the biggest month of gains going back to November 2020, we pulled back just a little bit on the S&P 500, down 0.1%. On the NASDAQ 100, down 0.1%. Looking ahead to more economic data, Lisa flagged this, the ISM manufacturing coming out a little bit later today, then on to ISM services. Then we get CPI next week, August 10th, before we get there, payrolls this Friday. This equity market building off the lows of June 16th. This bond market, yields have declined substantially from the highs of June 14th. Yields have gone from, say, close to 350 down to 264 on a 10-year, on a 2-year down to 288. Another part of the bond market that's backed away in a massive way, topped out June 14th, the Italian 10-year yield has gone from close to 420 all the way back in to 294. Now, I can find a lot of bad news out of Europe. Can I just say, Tom, that maybe that is just a little bit of a ray of light? The fact that we haven't got this redenomination risk bubbling away at the same time that that economy is facing very, very real challenges.
Well, the war is really challenging right now. But I do agree, John, there's so much gloom about Europe. You wonder where the glint is going to be, where maybe they get it going. And I really wonder what the tourism effect is in some of those geographies. Every report from the airlines is it's an absolute boom tourism economy.
I've lived it, Tom. Everywhere you go in Italy, an American accent. The why? Euro dollar at 102.42. Goldman out this morning, cutting their 3-month target on euro dollar from about 105 down to 99 cents, Tom. They don't think this market still reflects just how much pain that economy is about to go to. Today, at least, though, again, Tom, dollar weakness, 4 days of it now. Euro dollar positive, 0.2%.
There it is, a 105 on DXY. Round that up, maybe a 106. We're watching the 10-year real yield as well.
Much more still to come. That's your cross-asset price action. We need to get you some single names. We can do that with Bramo. Hey, Lisa.
Check it out. It's green. I'm not talking about stocks that are losing. I'm talking about stocks that are gaining, even after reporting earnings. HSBC came out and said that they were going to reinstate their dividends starting next year. They beat expectations, particularly on currency trading. Those shares up 7.4% in the pre-market if you look at the ADRs trading in New York. And then there are a number of acquisitions this morning, or at least planned acquisitions announced, which is interesting considering the slowdown that we've seen in capital markets in both acquisitions and IPOs, not to mention debt sales. Global Payments said that it was going to buy EVO Payments to expand in Europe, to expand in South America. Those shares up nearly 2% after announcing that. And Valvoline, Tom was mentioning this earlier, said that it was going to have its petroleum unit acquired by Saudi Aramco for $2.6 billion. How much is this going to be at the beginning of a slew of acquisitions in the energy space, especially because they have that free cash flow? Talking about energy, it is interesting to see that prices are down. Oil prices have come off, especially after that factory output data out of China. ExxonMobil reflecting that. Those shares down 0.8%. Devon Energy not. Those shares up 0.6%, even after a monster rally this year. That company set to report earnings after the bell. The expectation is for record shale profits at a time when they have reported for a decade or more losses, disappointments, debt holders that are sitting there wondering whether they're going to get paid back. And Activision Blizzard also out after the bell. The video game maker has already gained 20% year to date. Can they confirm that with a really robust set of projections, even as people start to have more things to do with their time other than sit home and play video games, Tom?
Well, Lisa, thanks so much. Laura Rame joins us right now with FS Investments with a really, really sharp note about what to watch as we vault into August. Let me take you back to March of the beginning of the pandemic. Claims exploded higher, 5.9 million, I believe that number is. It's a huge statistic, and we've come down to the glory 2 years later of 171,000 with a survey this Thursday of 260,000. Laura, good morning. You say it is the statistic that matters, and you benchmark it at 280,000. How close are we to getting to the ROM 280,000?
I still think we're about a quarter away from getting to a level that much more clearly predicts a recession as defined by the body that really is the arbiter of this, the official referee. Claims typically bottom about 9 to 24 months ahead of a recession, and they bottomed back in March at a very historically low level, but they've been slowly creeping up. And there's a seasonal component to that. I think that's why I'm watching something a little bit higher, more like 280, to try to differentiate between something that's more cyclical and something that's just seasonal.
Does the Fed wait? Is the Fed ex post where they just have to wait for the lower range 280,000, or do they act before?
So they're acting, and I think this is the big question that we saw after Wednesday, right? The markets are now really pricing in rate cuts, and it's caused the Fed funds futures curve to diverge significantly from the dot plot, which, I grant you, the Fed really has removed their forward guidance piece of this. But I do think that is going to be at the core of Fed speak this week. Fed speakers are looking at the market reaction, and the higher inflation is a game changer. You cannot price in the same Fed that we had in 2018. You can't price the same reaction function. At the first sign of weakness, and we're already seeing that, the Fed's not going to be able to come in and ride to the rescue with rate cuts with the same speed and flexibility that they would have when we have inflation at 2%.
Lara, what's driven you crazier? The recession debate or the interpretation of that meeting last week of this Fed?
I think the recession debate to me is really taking the oxygen away from what we really need to be focused on. Because the start date of the recession at the end of the date is really only good for years later when we're comparing it to other recessions. The reality is the economy is weakening. It's probably going to weaken further. Job losses are the hallmark of the classic definition of recession, that or they're a hallmark component of that. And looking forward, there's probably more weakness ahead. And right now, Q3 GDP is actually shaping up to be positive, a small positive, but I think we really need to wait. There's another shoe out there to drop, and it's the jobs. And the Fed probably said that about 10 times, that to them, they're really going to continue to address inflation primarily until they see problem with the jobs.
It's in the first line of the statement. You can see it in the first paragraph. They reference the jobs market. Lara, it raises the question, when do you expect to see that weakness bleed into the labour market? Is Friday too soon? Is next month too soon?
Yeah, it is too soon. We've seen this consistent strength. We still have the job openings. It's something that I don't really expect to materialize until the fourth quarter or even early in the first quarter of next year.
Which raises a question, Laura, about whether the dual mandate of the Fed comes into question at that point, whether inflation starts to become less of the obvious goal if the labor market is also struggling. Do you think that when we get there, inflation will have come down significantly to a level where it will be a more comfortable discussion for the Federal Reserve to have?
No, it so much has to go right to get inflation back down to anything close to where the Fed can plant a flag and declare victory. You need either deep energy price deflation, you need rents to turn around, and you need durable goods price deflation. All those three components will be required. And right now, I'm looking at year-end GDP. It's hard to even get it below 7%. My forecast still is around 6%, but that's looking increasingly optimistic with every month where you just get these reports filled with upside surprises and inflation bubbling up from virtually every quarter of the economy. So it's a lot of economic uncertainty over the next year. And this is something that traditional equity markets just haven't wrapped their head around. They're looking at a more classic V-shape recovery, and I would argue we still haven't hit the bottom of that yet.
Just quickly here, Laura, given the fact that Fed Chair Jay Powell came out and said that we are getting closer to neutral, and that Larry Summers came out and said that that was indefensible, where do you see this idea of neutral kind of evening out?
Their estimates of neutral are so based on their Phillips curve related models, and they really take for granted this deep, durable goods price deflation that we've seen from China. In the face of deglobalization, neutral is likely higher. Their models haven't caught up to that yet. And I think that's what so many of us are sort of pounding the table about. It's going to have to be a higher terminal rate. It may even be 3.5%. But even that, I think, would require a hawkish pivot from where markets are positioning today.
Lara Raim, thank you, of FS Investments. The fact that we're debating whether we have or have not got a recession on our hands at the moment, I think that just tells you we're not in a great place. Connor Sen, the columnist for Bloomberg Opinion, just tweeting me and saying the following, and I think this is a really good way of just wrapping things up. Where their problems stem from is affirming that long-term neutral rates are around 2.5%, which anchors the 10-year yield around that level, which anchors mortgage rates, which supports housing. They're not sure how to make markets do what they want. TK, that's an interesting take from Connor Sen just moments ago.
And what's interesting about it, and I thought Laura was just brilliant on this, absolutely brilliant, was the idea of how do you get the terminal rate up? How do you get the new 2% up near Adam Posen's 3%? And the way you do it on a very coarse basis, a blunt basis, John, is to look at the service inflation dynamic versus the global U.S. goods disinflation dynamic. If you get a little bit of a goods permanency above zero and you get a persistency of service sector inflation, you don't get back to 2%.
Looking ahead to next week on August 10th, these are the numbers so far. We're putting our survey together. As the numbers keep coming in, the median's going to change, but at the moment the estimate is 8.8% headline, down from 9.1. The estimate for core, stripping out food and energy, is 6.2, up from 5.9.
Wow.
And Lisa, as you know, this market will be very focused on the month-over-month core figure, just to get a feel for how sticky, how broad this story is.
The conversation becomes a lot trickier when it's not just the direction of travel, but how quickly inflation is coming down, what the drivers are. This is a level of nuance that we do not understand how it's going to be received in markets.
Nuance these days.
Exactly.
Come on. Futures down a tenth on the S&P. From New York City, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. President Biden is isolating at the White House after testing positive again for COVID. He has a so-called rebound case that is seen in people who takes the antiviral drug Paxlovid. The White House says the president is not experiencing any symptoms. In eastern Kentucky, the death toll from massive flooding has now risen to 28, and the state says more fatalities are expected. Rescue and recovery efforts were slowed Sunday by up to four more inches of rain. About 400 people have been rescued by National Guard helicopters. And the outlook for factories around the globe has gotten worse. European factory activity plunged in July, and Asian manufacturing output also continued to weaken. It's being blamed on a slowing economy and those lingering supply chain complications. And Saudi Aramco has agreed to buy Valvoline's global products and retail services businesses for more than $2.6 billion in cash. That will let Aramco expand its refining and petrochemicals operations. Valvoline says it will now become what it calls a pure-play automotive service provider. And shares of HSBC are rising. Second quarter earnings were better than expected, and the bank promised to resume paying quarterly dividends next year. HSBC is pushing back a call by its largest shareholder, China's Ping An Insurance, to split up. The black actress who eroded racial stereotypes in the 60s, TV series star Trek, has died. Nichelle Nichols was 89. Nichols portrayed Lieutenant Uhura in Star Trek and was involved in the first interracial kiss on U.S. network television. At one point, Nichols wanted to quit the show, but civil rights leader Martin Luther King Jr. persuaded her to stay. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
The outlook for the Chinese real estate continues to be weak. We're some quarters away from saying we're through the worst of it. So we do think we're going to see some further impairments in the second half on that portfolio. But we're managing it, and in an overall percentage of our overall book, it's very modest.
If HSBC has got some concerns, then maybe we should all have some concerns. Ewan Stevenson there, the HSBC CFO, on the situation in China at the moment. From New York City this morning, good morning. Futures unchanged on the S&P. On the Nasdaq 100, we recover just a little bit, up 0.1%. Yields unchanged at 264.87. You know the approach to Chinese data over the last decade or so. If it's good, it probably isn't. If it's bad, it's much worse. That seems to be the reaction from investors, Tom. 49 was the official manufacturing Purchasing Managers Index. Of course, anything below 50 is in contraction, and that number is in contraction for the month of July.
When do we get the data, John, this morning? 10 a.m., is it?
A little bit later at 10 a.m. ISM Manufacturing, Tom.
We will look for that as well. Right now, not on Dr. Copper, not on Dr. Gold, Dr. Gupta here on a ratio. Pretty?
Of Dr. Copper versus Dr. Gold. At least that's what I'm looking at when it comes to the impact of that Chinese data that we're seeing. Of course, John just talked about the contraction there. We've actually looked at the sentiment around China. It has been worsening in the last month or so, which brings me to my chart of the day, a Jeff Gundlach favorite. The idea that copper, this kind of growth proxy or global growth proxy, largely driven by Chinese demand relative to gold, the global haven of sorts. And really, we're looking at, folks, at a 3-year time frame going all the way back to 2020, where you see this massive acceleration. The line goes up till 2021, and then kind of stagnates for about a year until June of 2022. So I want to say in the last month or two, where you see this steep decline. Now, a lot of this is coming from China, just given that they're the ones that are driving that global demand. And remember, that growth that you're seeing in China did actually hold up the global economy through the majority of 2020. Now that we're seeing recession calls of Europe and here in the United States as well, it really is China's whim, I would say, that's driving this particular ratio.
Critty, thank you so much. We have been discussing Asia this morning, a lot of different ideas here on the trip of Speaker Pelosi in Singapore, and CNN saying expected to attend Taiwan. That is not an official announcement. We have to turn to that. Enda Curran joins us now, originally on economics and, of course, our chief Asia economics correspondent. But, Enda, I've got to go to the reality, and I guess it's to the romance of Hong Kong. In that olden days, the West would show the flag in the harbor of Hong Kong. It was all a beautiful scene for the movies, and it's gone. What is the linkage of Beijing to the military of China? What is the linkage of President Xi to his Navy as he addresses Speaker Pelosi's possible trip?
Well, those days of courtesy calls to Hong Kong are certainly long gone now, Tom. I think obviously there's heightened tension in this part of the world at the moment, just to see how this visit does play out. You mentioned CNN, Taiwanese media also reporting that Speaker Pelosi will visit Taiwan. We had some hawkish comments today from the Chinese Foreign Ministry in Beijing, daily briefing, saying they wouldn't stand idly by. And then, of course, through the state press, they're also sending out pretty hawkish signals. And one paper, the Global Times former editor, warning about the powder keg that is the Taiwan Straits being threatened. So it is all stacking up now. And of course, quite apart from the political aspect to it, if we do see heightened tensions in this part of the world, there will be an economic spillover. It will have an impact on investor flows, on investor capital, and of course, arguably could also have an impact on China's own recovery too. So I think a lot of eyes are on now just whether or not Speaker Pelosi does go ahead with the visit, and then, of course, the extent of China's response to that.
And on the flip side, how much the economic picture currently in China is playing into its hard line on Taiwan, on the U.S. visit, on military buildup in the region. How can you connect the two, given this incredibly weak data and other signs that it really is an escalation in terms of deteriorating economic growth?
Well, so last December, when China had its big economic conference to plan the year ahead, the kind of theme back then, Lisa, was all about stability for the year ahead. Well, they have had anything but economic stability, at least for this year. We saw that again in the numbers today. Like you mentioned, the official PMI, very surprisingly, back in negative territory. Now, that was quite broad-based. The weakness there was across big factories down to small factories, production, new orders, all softening. Not just a story about supply chain disruption, hints there that global demand is coming off. And remember, exports were a big story for China's economic recovery over the last few years. So on the other side of the ledger, we had numbers saying property sales at the top 100 developers today continue to fall, down almost 40%. So you'd have to say, A, the economic story is certainly not going the way the government want. There is a lot of discontent on the ground. We know that through open source social media, for example, the boycotting of paying mortgages to developers who are not building flats. It's a fairly unprecedented situation in China. So when you look at the economic side of it, you'd say it's not good. Things are not yet stable. The economy is headed in the wrong direction. And when you consider that they're heading into the all-important meeting at the end of this year for President Xi to get its third term, a lot of analysts are saying that it's in the existing government's interest to whip up rhetoric on all fronts, and Taiwan certainly will play into that role.
And to just quickly give us a sense of how much popular support there is for China's trying to clamp down on Taiwan and include it in the mainland.
Always difficult, to be very precise about it, Lisa. But, on social media as one gauge, there's always nationalist rhetoric. These things do get whipped up. The government always says that any kind of slight against China is a slight against the 1.4 billion people of China. But we do know, certainly at the official level, the warnings have been very sharp. The rhetoric has been very hawkish. And as I say to you now, we'll have to see just exactly how they do respond if Speaker Pelosi does go ahead with that visit this week.
What a week in that part of the world. Enda, great work from you as always, buddy. Let's catch up soon, potentially tomorrow. Enda Curran there on the latest. Timing markets is really, really hard. And one of the best individuals at timing the credit market is not even a credit trader or an investor for that matter, is in the C-suite at Apple. It's Luca Maestri, the CFO. Apple just coming out, Tom, a 4-part debt offering, according to our reporting. And I'm, Tom, looking for a little bit more detail on this. But you know Apple is very, very, very good at coming to market at just the right time when yields are rolling over.
Well, this is a sport of their share buyback and, of course, dividend increase as well around huge Titanic-free cash flow. John, 95% equity, 5% debt. That's actually a pretty big number for a tech company. They've built that out over the years. But with the size of Apple, a market cap of $2.3 gazillion, you got $95 billion in long-term debt, 3.9%. And $25 billion of short-term debt. John, that's almost the same amount as you and me combined.
I wish, Tom. Lisa, Larry McDonald sent me a chart a number of months ago, and it was just a chart of credit interest costs for companies like Apple, and it just plotted the issues from Luca Maestri and the team over at Apple. And guess what? Every single time, pretty much bang on the money.
Yeah, pretty much. They've done a really amazing job at timing the lows in terms of yields, the high in terms of price, in terms of selling debt, which raises a question. Was this rally in credit that we saw in July, which was a monumental rally, the last gasp before something else? Because what you saw was not only did interest rates fall, but so too did credit spreads, did the potential perceived credit risk at a time when people were worried about recession. Is that too good to be true?
Just getting that headline now. Apple kicking off a 4-part bond sale to fund buybacks and dividends. More still to come after a monster rally through the month of July. Here we are kicking off August with futures slightly negative by 0.1%. From New York City, this is Bloomberg.
We heard a lot of talk of recession, but we haven't seen any indication in the results.
We shouldn't obsess over whether there's a recession. We should be thinking about, as investors, what the depth of it might be.
I think the Fed really has no choice. They have to continue to tighten.
I feel like they induced this rally.
We think the Fed declares victory a little earlier. Remember, Paul Volcker did too.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene back all together after a lengthy holiday. So much going on here, but really all of it in the jobs report. Chairman Powell, John, he's looking at the labor economy. We will look at it on Friday.
Payrolls this Friday, looking for something like 250K, a really, really dovish interpretation of what he said last Wednesday, and a ton of pushback from Fed watchers over the last couple of days, including Fed officials. Neil Kashkari going into the weekend, Tom, pretty clear. We've got more work to do.
We've got more work to do. So does Apple Computer. There's about 5, 6, 7 stories on a very busy, really interesting Monday here, John. But let's just go to the latest. Apple Computer with free cash flow modeled for next year of $110 billion. They're broke. They need to issue more debt.
Not quite, Tom, but yeah, they're issuing more debt. 4-part debt offering to fund buybacks and dividends. We've seen this work before from the C-suite over at Apple, Tom, and they usually do it. They time it perfectly in this market. Spreads have tightened a lot over the last month. Let's be clear about that. This August, Tom, I wonder what it will bring for this credit market.
Lisa, this is your wheelhouse. What do you see?
I see that people don't understand the rally that we've seen, that they think it's gone too far, too fast. A lot of people would say that. Now we see companies starting to come back to the market after more deals have been pulled from this market. In other words, companies that were planning bond sales and decided not to, going back to the heart of March 2020 of the pandemic, and then before that in 2009. So what we're seeing is a release in markets to allow the likes of Apple to sell bonds, to get this, pay for dividends and share buybacks.
You know, we haven't talked, Lisa, about what is it, John? June 16th? Is that where you put the bottom of the market?
That's the low for the Nasdaq. The high for yields was 2 days before that.
I think the Dow bottomed out there about the same time. Lisa, what is high yield and IG done in this great equity bull market?
So high-yield bonds have just posted their biggest rally going back, in decades, right? I mean, it's been an incredible rally because you've had both components working for the market. At what point, though, has it gone too far? If we are heading into a downturn, wouldn't you expect the default risk to increase? Wouldn't you expect people to be more concerned about that? Or is there still a belief that the Fed will cut rates quickly enough to allow this market to continue humming along? And that's really the conundrum underpinning this.
Some of the tensions over the weekend. I got 6 ways to go here, John, before we get to the data. I guess I'm looking at CNN over here on my screen, and they're talking up their news of a Pelosi expected trip to Taiwan. John, we've done a lot on that this week, this morning, Monday, I should say. What are your thoughts on this?
That's the foreign policy story of the moment.
It
but
is.
We can't just focus on the international aspect of China's relationship with the rest of the world. We have to talk about China's relationship with China. The domestic data, Tom, is not great. Sub 50 on the PMI, that's contraction. We know about the mortgage boycott. We're being told it's spreading. We know about what's been happening with COVID zero. That's sticking. What on earth does GDP look like that in that country, Tom? And how concerned are they about social unrest at home, not just unrest abroad?
I agree. I really agree with you, John. As I thought Enda Curran captured that very nicely. It's going to be interesting. The path here, John, November is like tomorrow for President Xi when he's got that party Congress.
I'll tell you what, for November for this market, it's about 10 years away.
It is. It
Tom,
feels
that way.
I'm going to go with the VIX up a stick here. The market pulls back ever so fractionally, recalibrating to the bang-up 6 weeks we've had. John, what do you see?
It's a mild move, Tom. We're down 0.2 on the S&P. On the Nasdaq, we're down a little more than 1/10%. Yields up a basis point to 265.77. And if you wanted to look for some dollar weakness, it's out there across the whole of G10, basically. The euro-dollar positive about 0.1% to 102.31. Dollar yen with a sizable move, Tom, 0.6%.
Tony Rodriguez joins us right now. He's had a fixed income strategy at Nuveen. Tony, there's a 60-40 theory in retirement planning. Douglas Cass sent me a great chart this morning that the 60-40 model now is the grimmest it's been over some 30 years. How do you recover in bonds if the 40 of your 60-40's been a disaster?
Well, good morning, Tom, and good to be with you. Probably the best news about the 40 over the first half of the year is that it did a lot better than the 60. So we are beginning to see the fact that investors do need to have fixed income in the portfolio to offset periods like we saw in the first half, where you get equities down double digits, even 20+% when you look at the NASDAQ, for example. Now, as we move forward in fixed income, which also had a pretty rough first half of the year, worst on record, really, we don't think we're going to see those kinds of negative returns, but we do think that it's going to be some rough sledding. We're expecting a little bit modestly higher rates, but we're expecting quite a bit of volatility and probably some more spread widening in the non-treasury sectors of the fixed income market. So there aren't great places to hide, but we do think that fixed income is likely to outperform the equity markets, given that we think this recent rally that we've seen across all risk sectors of the global capital markets is maybe a little bit ahead of itself.
Tony, just how much has inflation protection cheapened in the bond market over the last month or so? And would you tell people that maybe they should have a second look?
Yeah, we have seen break-evens fall. We think that might be, again, a little bit aggressive. So we think that inflation protection is reasonably attractive right now for investors, because we think that the core elements of inflation are going to be stickier than maybe market participants currently expect. So we think that's going to keep the Fed in the game longer than what's currently priced in the Fed funds futures. So our terminal rate would be above what we think what the market is currently pricing. And we think that core inflation will be stickier and more persistent. So that all leads to an environment where fixed income returns will be challenging, volatility will be higher, and recession risk, in our opinion, is quite high as we move into 2023.
Over the past few trading days, the story really has been in that two-year yield. How much yields have come in on the expectation that the Fed will back away from some of their rate hiking path, or as you say, what you think is the incorrect assumption that they could potentially cut rates pretty soon. How bad do you think that the market has this? How badly mistaken are they in terms of how much the two-year yield has come in?
Yeah, well, again, we think that the market is basically pricing in a Fed put, where we think that strike price is well out of the money. When you think about the post-global financial crisis, where inflation really wasn't an issue, in fact, deflation was maybe the bigger issue, the Fed put could react quite quickly to weakening economic data. As we sit here today with almost double-digit headline inflation and core inflation that we think is still actually accelerating and will be with us certainly through the remainder of this year, we think that Fed put is out of the money. So the market's being a little bit aggressive, both in terms of risk asset response, but also, as you mentioned, with the 2-year. So we think we'll see a reversal. We think we'll see an increase in the 2-year. The curve will remain inverted and invert further, in our opinion, as we move towards the end of the year.
Over the weekend, I got a lot of hate mail, Tony, from people saying you're ignoring all of the inflation data showing that it's rolling over. You just want to be bearish. You want to say that the Fed's getting it wrong and that the market is priced in too aggressively and easing in conditions. You are seeing signs that inflation is starting to cool. Even in rents, they're not going up as quickly as they did a year ago. However, how much does inflation have to come down to get that Fed put back into play?
So in our view, you would have to see kind of core inflation back pretty close to 4% with a clear trajectory to 3% by the end of 23. And in our mind, where we're looking at core inflation, shelter costs, for example, those have actually been accelerating. If you look at a 1-month annualized, it's faster than a 3-month, which is faster than a 6-month annualized. So we're seeing a rapid increase in the pace of inflation. We do think it will be stickier. So I think the only way you could square the market response would be for this immaculate disinflation to occur. And in our view, that's going to be delayed. It'll happen, but it's really not until late 23, 24 that we begin to really see some substantial improvement in the core inflation metrics.
How much work does the Fed have to do between now and then? Tony, thank you. Tony Rodriguez there of Nuveen. Bramo, are they handwritten letters or are they emails?
In pencil.
You get handwritten letters. Tom and I get some handwritten hate mail. Sometimes we thought you got all the love mail.
I also get hate messages. People think that I'm too
was
bared.
Unaware of that.
Yeah, for sure.
That is not on.
Well, I think that it's interesting that people are seeing this decline in inflation, that there are some inputs that are coming down, but this discussion of how quickly does it have to come down, whether there are stickier elements, and Tony was just talking about rents. The Wall Street Journal just has a story about how nationally average apartment rents have come down a tick to 9.4% in the second quarter of 2022. Yeah, that's down from 11.1% the year before, but really?
This goes back to Tom's number one question, and Tom, I think you're right to keep asking it. What do we come down to? From 9 down to what by year end, and how much work does this Fed need to do in between?
If it's a curve down, it's not linear. Let's say it's a staggering curve down of some form. How many kinks are in the curve? And to me, John, it's 2-part right now. I could change my mind. Where you go from 9 to say 7, easy beans, and then from 7 to whatever, and then the whatever down to wherever we're heading is a complete mystery right now.
Looking ahead to the data this week then, ISM manufacturing later, then tomorrow we get jobs. Job openings might be interesting given what's happening with hiring intentions and job openings at some of the big firms in America right now. Do they start to pull back a little bit more in the way the Fed might actually like to see them do? And then, Tom, we get ISM services, and then later on in the week on Friday, it's onto claims and onto payrolls.
John, you can't make money. You can't lose money with Apple. The Apple 2.8%, 40 years out, make it 39 years out, has gone from 98 down to about 77. That's called price down, yield up.
And that's hurt everyone, including
hurt
Apple.
Everyone. Yeah.
Including Apple.
I loaded the boat on that. It's killed me.
AAA credit. I imagine there's going to be a ton of demand for this one, and then who knows what comes next.
AA plus credit.
Was that sinister enough for you,
That was
Bramo?
good. Yeah, I like
I'll
that.
take the hate mail on the weekend.
In pencil.
Do you want me to be the bear of the week? I can be the bear of the week.
I don't mind the hate me ML. I think it's instructive. I think it's good.
From New York. Futures down 0.2. We don't do hate mail. It's unwelcome and unnecessary. Just send it all to Tom.
They send it all to me. You got that right.
With the First Word News, I'm Ritika Gupta. Shares of HSBC are rising. Second quarter earnings were better than expected, and the bank promised to resume its quarterly dividends next year. HSBC is pushing back against a call by its largest shareholder, China's Ping An Insurance, to split up. The architect of the Democrats' tax, climate and drugs bill, Senator Joe Manchin, is lobbying colleague Kristen Sinema to get on board. Manchin argues that the measure does not raise taxes. Sinema has not divulged whether she will support the bill or not. She has the power to sink it. Minneapolis Fed President Neil Kashkari says the central bank is committed to slowing inflation to 2%. Kashkari told CBS the Fed will do what's necessary to bring down demand. He said faster inflation is being driven by supply chains disrupted by the war in Ukraine and other factors. Boeing is starting the week with a double dose of good news. For a few days at least, the aerospace company has averted a strike by machinists that would have crippled its fighter jet factories. Meanwhile, regulators have okayed Boeing's plan for repairing tiny flaws in the 787. That is a big step towards resuming deliveries that have been largely halted since 2020. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Season is here.
Everything I've read has just got the R word. Resilience, not recession.
Earnings are expected to be so weak that I think that presents a very intriguing opportunity.
Bloomberg breaks the numbers first.
We get a deluge of earnings globally this week from Alphabet and Microsoft,
with exclusive expert analysis.
These earnings have proved to be really inconsistent, not actually showing a real picture that goes one way or another.
Bloomberg Television and Radio, the fastest numbers and analysis you trust.
Right now, markets believe the ends to what the Fed wants, lower inflation. They don't quite have it right about what the means will be. The means will be tighter financial conditions. In our forecast, we think the Fed declares victory a little earlier. Remember, Paul Volcker did too.
That was the brilliant Vincent Reinhart, the chief economist at Dreyfus and Mellon. He's not alone. This from Bill Dudley, the former New York Fed president. Earlier this morning on Bloomberg Opinion, he said this wishful thinking is both unfounded and counterproductive. Live from New York City this morning, good morning with Tom Keene and Lisa Abramowicz. I'm Jonathan Ferro. Kicking off a brand new trading week, a brand new trading month with futures down 1/3% on the S&P. TK, the NASDAQ 100, a little softer, down 0.2%.
A little softer. It'll be interesting to see what Apple does. John's surveillance correction. Bob emailing in from the Hamilton College goalie camp. Thanks for listening up there near Lake Moraine. And he says, Moody's has Apple as AAA. You were correct, John. And I was also correct. S&P has it at AA+.
There we go.
I don't know what the difference is, but, you know, we like to have a surveillance correction when we
Who are the
need
other
one.
two companies, Tom? I believe it's Microsoft and J&J, isn't
know.
it? I think. I will double check. I
Bob,
can see
thank
Lisa
you.
typing away at the corner of my eye, so
yes.
I know Lisa's double checking right
Fired
now.
up. Fired up.
It's taking a minute to load. Yep, J&J and Microsoft.
There we go.
Good job.
Thank you.
And she knew how to find
Thank you.
it.
I could take the week off. I'm pleased we paused for that.
You got any more data here before we get to
I'm
Dr.
so
Thin?
done. I'm so done.
Very good. Well, welcome on a Monday. It's a No News Monday. We're kidding. 10 o'clock this morning, that first look at the American economy with what John loves, the ISM. And then a lot of data coming up, crescendoing to August 10 when there is inflation. Win Thin joins us now, global head of currency strategy at Brown Brothers Harriman. Win, finally a dollar breather. Is that it for strong dollar?
No. And a simple, quick answer is no. Look, I know the dollar bears will come scurrying out. They've been very quiet the last few months. You know, to me, it's a lot about positioning. It's really mostly about the yen, if you think about it. The euro's having trouble getting much ground because basically the Eurozone is heading into recession much sooner than the U.S. Will. Germany's already there. The other major economies are heading there. So to me, as an FX analyst, you know, you always have to ask, you're bearish on the dollar. What's the other side of the coin? And to me, the other side of the coin looks very ugly. Eurozone, UK, China, Japan, you know, all grappling with the very same issues that the U.S. I just happen to think the U.S. economy is much more resilient than these other economies are right now. And so I remain dollar bullish. But we've got a period of consolidation, no doubt about it. As you pointed out earlier, we've got some key data that'll set the tone, for the sort of medium-term dollar outlook.
Win, I want to talk about China. John and Lisa have mentioned the domestic disquiet in China right now. How does that redound on the Pacific Rim? How does Brown Brothers Harriman play the Pacific Rim currencies?
Well, the China situation is so complicated. You know, before sort of this last downturn, you know that President Xi was trying to juggle a lot of balls. You know, whether it's addressing income inequality, maintaining growth, maintaining financial stability. and then COVID hit, and it's been really, really cloudy. In the past, what's always been the case is China, once growth starts slowing, basically China steps on the gas, steps on the accelerator, gets growth going again. But they've been very circumspect. They have maintained a much more targeted approach. And I think that's because they see a lot of financial excesses, getting in dangerous territory. As you mentioned, there's been social unrest there related to the property sector. Bottom line, I think China muddles through as always, but it's not as clear as it's always been. I think that the reliance on China as an engine of growth for Asia is no longer there. And so to answer your question, I think a lot of the economies that are dependent on the mainland China, that would be Hong Kong, obviously, Korea, Singapore, Taiwan, I think they're all in for a bit of a rocky road. The good news is that the fundamentals are very strong. They all have basically have current account surpluses, strong external positions, et cetera. But I think for equity market investors, I think it's going to be a little bit tougher road ahead for emerging Asia.
And based on that, and based on some of the weakness that we've seen on a fundamental level from the emerging world, there is a question of why it has delivered some of the best returns. If you take a look at carry trades executed in euros, they've returned something like 29% so far this year because of the deterioration in the euro. How much longer can that kind of trade continue, just purely based on where the euro is?
Sure, that's a great question. And obviously with carry trades, always the funding currency is always key, right? If you use the dollar, you'd have suffered obviously massive losses. I think the yen was popular for a while, but that's obviously we've had a 7-8 big figure move in that. That's kind of called into question. Euro, I think, has some room to go in terms of being a funding currency. Again, I alluded to this earlier. That the fundamental outlook there is simply put just awful. The market's been dialing back ECB tightening expectations. I think your wonderful MIPR page is showing a peak ECB deposit rate of, I think, 1% currently, down from over 2% just several weeks ago. So that's reflecting not only the ongoing slowdown in the Eurozone, but also the risks of the energy shortage in the fall. So again, it's really handcuffing the ECB's ability to tighten. I think that's going to be manifested in further euro weakness. We touched parity early last month. I think that trade is still in play. So to me, though, I think EM is still dicey, though. I mean, I think it's when you have slowing global growth, possible global recession, tight global liquidity conditions, it's very tricky. To me, it's like trying to catch a falling knife. Euro trade has obviously worked, but it's risky. I'm very defensive on EM right now.
Winston of Brown Brothers Harriman, trying to catch a falling knife. TK, I remember talking about the Swissy maybe 10 years ago, and it was like putting your hand in a blender. That's what someone told me. It was that ugly. Tom, I have to tell you that when it comes to the Federal Reserve, the debate at the moment is really divided. But when it comes to Europe and the ECB, it is so one-sided. I don't know a single person who really believes this ECB can go that far. And the window for most people just seems to be getting smaller and smaller and smaller.
I was upset this weekend, John. I'm glad you bring this up, because the U.S. newspapers that we now all read on the web are trying so hard to do softer sort of news stories. And they sort of bury that there's a war going on. And that's what they're dealing with in Europe. There's a war going on. I saw the petrol prices, John, for Sweden and the United Kingdom. Wow.
Brutal.
Yeah. That's the correct word.
And energy prices in the mainland on the continent, in the Eurozone, could get a whole lot worse.
Yeah, I mean...
Could get a whole lot worse.
So I think it's a completely different analysis. You talk about rent worries here. Yeah, we have rent worries here. Nothing compared to what they're dealing with in
Nowhere near, Tom.
Europe.
Nowhere near. And they haven't had the snapback, the recovery that America's had as well. And that's been an issue too.
And that's technology overlay. We have the technology overlay. They don't.
Futures down a third on the S&P. We're down 0.2 on the Nasdaq. Your euro-dollar story shaping up as follows. Up by a little more than 0.1%. Positive on that currency pair, 102.37. Cruise down about 3% at 95.70 on WTI. From New York City this morning, good morning. Hello, August. This is Bloomberg. Tons of economic data this week. From New York City this morning, good morning. The ISM manufacturing data out a little bit later. Some PMIs, ISM services, JOLTS, jobless claims. Then on to Friday, payrolls, and on to next week, US CPI. Futures right now a third of 1% lower on the S&P, on the Nasdaq 100 down a quarter of 1%. Some brilliant columns out on Bloomberg Opinion today. This just in from Mohammed Al-Arian. Here's the first line. July, an illustration of the adage that the market is not the economy. You think in a big way. That seems to be the takeaway. And then this from Bill Dudley a little bit earlier this morning, the former New York Fed president. Investors have lately become strangely optimistic that the Federal Reserve won't have to tighten monetary policy much further. He goes on to say, this wishful thinking is both unfounded and counterproductive.
I'm sorry, John. I'm speechless after a headline I just saw. John, you got to help me translate this, folks. We've got to get this.
Well, I haven't seen it, so how can I translate it?
John, it's just out here. PepsiCo to take 8.5% stake in Celsius for $550 million. Isn't that a crypto company?
That's a fitness drink maker, Tom, apparently.
Celsius?
I've never had it, so
It's
I can't comment.
It's a competitor of Tang.
It's a competitor of Tang. Oh, they could have bought Tang because I'm loaded.
Do we cover $550 million deals here, Tom?
I don't think we do. I just saw it and thought of crypto. I'm like, okay.
Okay.
Anyways, we'll have much more on that from our crack corporate team.
Is that why you wanted to cover it? You thought it was a crypto deal from PepsiCo?
You know, they'll no doubt do a better job than I just did there. I just went down in flames there. I'll probably get hate mail.
Why did you drag me down with you? That's what I want to know.
It was a group effort. We were trying to get Bramo involved. And Bramo said, no. Stephen Whiting always says, yes. He's chief investment strategist and chief economist, Citi Global Wealth, but far more, he links profit into our economy truly like no one I've ever met. Stephen, you are the guy I want to talk to. Link in the earnings surprise in a 6-week bull market with Chairman Powell's economy. Take the profit and tell me what it means about our economy.
Well, the one thing I just heard from the comments earlier about, July or the stock market isn't the economy, a month is not a quarter, it's not a year. We had a quarter past where there was still lingering strength. You'll see employment gained in the month. And we're decelerating from a high level of production and employment gains. So the fact that profits are up 6.5% over the past year shouldn't be so much of a surprise. There is a bit of a squeeze going down on costs, sort of lower in the value chain, are going up more than the top line, and we're going to have a weaker period of profits in the year ahead. But if you were worried about the period we're just in, I wouldn't get too excited about that being sort of the terrible period. Like, that's all over with now. Now, when it comes to Chairman Powell, I think, again, the one thing that I would take away that's a little more positive and was a reason for investors to perhaps not really, jump out of the window was the fact that there's some recognition that the economy is not going down the way they expect. If you take a look at total home sales in the U.S., new and existing home sales, we're down 26% in sales from the peak if you combine these figures. There's plenty of signs that there's interest rate impact, leading edge knocking the economy down now.
In your notes, Stephen, we hear what we're hearing from others, which is avoid the cyclicals and such. Tell me how technology and the retail bet, as the Journal writes up today, how the technology bet is the non-cyclical play. It's what you want to be in given where we are right now.
Well, there are some technology cyclicals, and then there are some others. I would put advertising spending in very the cyclical category, personal computers to home electronics, this sort of thing, tech services, cybersecurity, enterprise software, these things much, much less cyclical. I would look at it and say, look, we have had a sizable drop in long-term interest rates already. Now, again, what are we talking about? 3.5 down to 2 3/4 or so. But the signs are there that we're going to have a low-level peak in long-term interest rates. And probably for the bulk of the secular technology area, we're probably going to have a fairly high-level trough. So a lot of the risk, the idea that just commodity prices can go up forever, the economy can have an inflationary boom, we're just going to fight that. I think those are the areas that we would think that are a little bit more vulnerable now. So again, a little bit of drift here towards high quality growth, which we can understand, but I don't think it's really that moment where we can say, well, the profit outlook is really improving for these firms too.
So embedded in what you just said, Stephen, are you basically saying the energy companies have seen peak valuations, that it's time to lighten up there?
Well, we did, for example, remove our overweight in oil field services. We're not seeing that industries like natural gas, LNG, a lot of some of the things that we are sadly in short supply because of the war in Eastern Europe are really poor investments. The valuation really isn't too troubling at this point. But the idea that we're not going to suffer at all in the commodity space because of Fed tightening and a slower global growth rate is a little bit too much. So, yeah, we've taken down some weightings there a bit and do think that, again, a harder landing for the economy is going to be felt throughout a lot of cyclical commodities.
So the Fed Chair Jay Powell spoke a lot about being data dependent. And we discussed a lot on this show. What does that mean? What data are they looking at? Can you give us a sense of what happens if the labor market data, if the jobs report that we get on Friday comes in hotter than expected? What kind of effect that would have on the equity markets?
Well, look, it means that the Federal Reserve is unlikely to be kind to the equity market, that it's not there, again, to protect investors. It's to protect labor markets and to get us to a lower level of inflation. But I would say, again, some of the signs that we have seen, being data dependent is a lot better than the Federal Reserve being overconfident in the economic outlook. And what we have seen with unemployment insurance claims up about 70,000 from its low point on a trend basis, that doesn't happen when the economy is growing at its potential, right? When the economy is growing strongly at trend, we don't get rising unemployment insurance claims. Now, the point that we're already expecting declines in the labor market is pretty far off. It's probably into next year. But I would say that, again, the way financial conditions have tightened, the way the lags play out, it's quite possible, again, that we're facing job losses on a net basis over the course of 2023. And if the Fed's going to be data dependent and instead looking at inflation issues, some of these inflation issues are really lagging indicators. Services price inflation, most closely linked to wages, has had little to do with the inflation spike of the past year. And it's a member of the index of lagging economic indicators. Unfortunately, those things are going to still show some strength. But eventually, the Federal Reserve is going to come around and say, well, you know, the fuel is out of the tank for inflation. And so how far do we want to push this? Must you crush the economy and, again, get ourselves into an easing cycle? Really, is that really the approach that we need?
Stephen, with great respect to ask this question, how flexible are corporations here, given what you just laid out, and given all the worries everybody has, particularly Lisa Abramowicz? How flexible are corporations to adapt?
It's a great question. And there's adaptation going on, but there's probably not some planning, you know, for some massive deterioration in demand. So they're going to be a little flexible, but I don't think that we can avoid some loss in profits in the coming year.
Steve, can I just get a sense for how confident you are? Where you think the next 10% move is from here? Lower? Higher? You've got a degree of confidence around that story?
You know, I think coming up with answers is different from knowing. And, you know, there's a few things we knew. We knew that an exogenous shock is not going to have the same effect as a business cycle. I think a great deal of the inflation that we've already experienced doesn't have a life of its own. I don't think that forcing supply and demand down together really cures this problem. But I have a great deal of confidence exactly when the Federal Reserve stops and sees that. So I think that we want to err on the side of caution a little bit. And that's what we're doing with portfolios. It's not a period when we can say the economy is at its weakest point and is able to recover again. That I'm sure about.
You're not alone. Steve, good to catch up, sir. As always, Steve Whiting there of Citi Global Wealth Investments. Coming up in the Open, as we count you down to the opening bell on Bloomberg TV, we'll be catching up with David Leibovitz of JP Morgan, among others, including Judy Bill and James Athey. That's all coming up in the next hour, Tom, on Bloomberg TV. Looking forward to it.
You're probably going to dive into this transaction of Celsius and Pepsi.
Without a doubt. What have you learned about that transaction?
I've been learning a lot here.
Riley,
thank you so much for emailing in from St. Louis. She's addicted to this garbage. John, they have kiwi guava sparkling Celsius Live Fit. They have Celsius Heat. They've got Lisa, have you ever had this stuff?
No.
I'm reading about Arctic Vibe, Tom. In that is a lot of caffeine and ginger root, and it's fortified with vitamin B and vitamin C, or you might say vitamin B and vitamin C.
I was just talking to John Fieldley about this, and of course, congratulations on the transaction. It really shows the entrepreneurship and all that. And I said, I think a natural for me is Celsius take an Uber. That would be, you
think they should take Uber?
No, I'll take the Uber.
Okay.
But it's you have your beverage while you're taking
I've got no idea where we're taking this.
John, you take your Uber instead of fitness.
Instead of working out, okay.
You've never done that,
right.
I know.
Sure.
But some of us have.
I'm on board. Bramo's got issues with this segment.
No, I just, would we have been discussing this if you didn't think that it was the crypto name? And I do wonder, there are a number of acquisitions this morning that are interesting, though. This idea that we are finally seeing some activity in capital markets is interesting because there had been so little for most of this year. The rally that we saw in the past month is actually giving way to the Apple transaction, to the acquisition of Valvoline.
That was very sensible.
That's actually a really fascinating development.
Well, Lisa, John took a call on the break. I wonder if he was taking some paper down.
That was very sensible. What are you implying? Why are you always doing this?
It's a 40-year piece, says you.
I might not be back tomorrow. We're down 0.4% on the S&P. You're happy with that, I know. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. President Biden is isolating at the White House after testing positive again for COVID. He has a so-called rebound case that is seen in people who take the antiviral drug Paxlovid. The White House says the president is not experiencing any symptoms. In eastern Kentucky, the death toll from massive flooding has now risen to 28, and the state says more fatalities are expected. Rescue and recovery efforts were slowed Sunday by up to 4 more inches of rain. About 400 people have been rescued by National Guard helicopters. Google, General Motors and Verizon are amongst the 68 companies backing affirmative action in upcoming cases before the Supreme Court. The companies have filed a brief with the court supporting programs that are being challenged at Harvard and the University of California. The cases are first on affirmative action to come before the court since conservatives gained a 6-3 majority. And Apple is tapping the high-grade bond market with a sale in as many as 4 parts. The money, they will be used for a number of purposes, including share buybacks and dividends. The longest part of the offering, a 40-year security, may yield up around 150 basis points over Treasuries. And PepsiCo will pay $550 million for a stake in fitness energy drink maker Celsius Holdings. It's part of a long-term distribution agreement. PepsiCo is getting convertible preferred stock equating to 8.5% ownership in Celsius. The company will also nominate a director to serve on the Celsius board. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
It's going to make inflation worse, actually. So they've got a big corporate tax increase that's going to probably make this recession that we're in worse. All of this spending is unnecessary. It's going to exacerbate inflation. It is not going to reduce the deficit.
Face the Nation with CBS. That was Mr. Toomey of Pennsylvania, of course, talking about the moment at hand and the domestic debates that we have. Sometimes you get lucky in your scheduling. We do that with William Cohen. To say he's chairman and chief executive officer of Cohen Group barely describes it. He's a former Secretary of Defense and, of course, his public service and really bipartisan approach here. But far more back to Nixon, Kissinger on China. He, among few, is on the high ground. Maybe Mike Mansfield up in Japan would be somewhat the equivalent. Secretary Cohen, we're honored to have you here today. Is Speaker Pelosi making the right decision if she travels and lands in Taipei and greets the Taiwanese people?
Well, I think what we have to do is understand what our policy towards China is and what our strategy is. We have taken a one China policy as far as the last 50, 60 years. And the question then becomes, what is our strategy for implementing that? Do we make a decision? Do we want to have any kind of a positive relationship going forward? And if so, how do we get there? And so I think what has happened with Speaker Pelosi's trip is she has raised very high expectations in Taiwan, very high anxieties in China. I believe that how we deal with Taiwan is a very big, bright red line as far as the Chinese are concerned. And I think they will respond, if not militarily. I don't expect that to take place if she should go to Taiwan. I think they will find a way to respond in their own fashion that will inflict some harm upon us. So it's got a tough decision to make. The military has apparently indicated it's a rather dangerous time for us in the region, and she'll have to take that into account.
In the arc that we have of our relationship with China, a one China, and with Formosa, with Taiwan, there have been assurances, 6 assurances over time. You are directly involved with that. How strong are our 6 assurances to Taiwan?
Well, the assurances are inconsistent. With the passage of the Taiwan Relations Act, and I was a part of that going back to 1979, we said that we will help provide for the defense of Taiwan. Since that time, President Biden has said we will defend Taiwan. That has caused great confusion in terms of not only with China, but also our Asian allies. All of those in the Asia-Pacific region, or now the Indo-Pacific region, are concerned. What does that mean? Are we prepared to go to war with China over Taiwan? And will they be with us? So we have to get more clarity in terms of exactly what we're prepared to do. Is it just help provide defensive equipment or actually go to war should China try to attack Taiwan? So there's confusion. There needs to be clarification. And that's something I would think that Speaker Pelosi has talked with the administration, has talked obviously to the military. And I think during this trip, she needs to talk and will talk with all of our allies in the Asia-Pacific region, because they have a lot at stake in terms of what we'll do and what we'll fail to do should there be a conflict.
Secretary, as the tensions begin and continue to really escalate in a new way between China and the U.S., is the U.S. dealing with a weakened or an emboldened Xi Jinping, a strengthened Xi Jinping than perhaps a few years ago?
Well, I think he's much stronger than he's ever been. I think that he will not be contested in the so-called election coming up. I think we'll have a third term. And I think the Chinese will regard this, even though we've tried to persuade them that this is something that we do. We defend democracies. We defend human rights. They will see this as pointing a finger in the eye of Xi Jinping. And I think when we talk about red lines, going back to red lines with Russia, for example, going back as early as 2003, Bill Burns, our current CIA director, wrote to the Bush administration, said, Russia will see any move on the part of Ukraine toward NATO or EU as a red line that they will not allow Ukraine to cross. Well, that was 20 years ago. I think from my travels in the entire region, China will see this as a red line, and they will find a way to take reaction to the United States that will in some way impact negatively upon the U.S. and our allies. So it's one of those issues. The Chris Christopherson song, is the going up worth the coming down? We will have to decide, is the going up in terms of ratcheting up the tensions with China worth what's coming after that? What will be the nature of the relationship? Will we still be engaged with China? Or do we want to follow a policy of decoupling? Can we pull our economic engagement with China out? And if we pull out, will the European allies pull out? Will the Southeast Asian allies pull out? Yeah. So these are all issues tied up with our relationship with China. So it's not easy. It's very complicated.
Secretary, just quickly here, do you think that this trip by Nancy Pelosi is advisable or a grave mistake?
I don't know the answer to that. I would think that one option would be to say that she will visit Taiwan, but perhaps at a later time. That would be one option. But she may feel that she's compelled to do so now, but understanding what the risks are. I think it's going to be complicated again because of expectations that she's being pushed by Republicans and Democrats to go. I think the administration is flashing a warning sign without telling her not to. So the decision ultimately will be up to her. But I think it does, it certainly has some grave dangers involved. There are many who feel China's bluffing. I don't think China's bluffing.
William Cohen, thank you so much. We look forward to speaking to you again, particularly on the U.S. military in a fractious 2022. William Cohen, he's a former Secretary of Defense for the United States, and of course at this historic moment. Lisa, really, really extraordinary how it is multiple fronts for our military.
Yeah, and how this is the ratcheting up of tensions that people do not really want right now in terms of yet another geopolitical point of tension. I also think that what Bill was saying there, what William Cohen was saying in terms of whether a military altercation and a ratcheting up of tensions escalates the decoupling of the U.S. and China is a fascinating point that really speaks to the economic place we're in.
That's right. That's where I go.
Does that
Absolutely.
end up leading to a longer-term inflationary push as the U.S. brings more of the activity back home? And we are seeing companies that do come out with reshoring plans get rewarded in the stock market. How much does that become a real theme heading into the next 12 months?
And right now, a headline coming out on Speaker Pelosi. Brad, help me with this, please. The Speaker of the House to land in Taiwan Tuesday night and meet lawmakers Wednesday as well. She'll be, I believe, in Taiwan. That's just breaking. We'll have much more on that across all of Bloomberg here through a most interesting Monday. Lisa, I've also got to go back to bond yields a little bit elevated here with an incredible economic data flow this week.
How much is this an expectation of a lot of pushback from Fed members who are planning to speak starting tomorrow, basically saying, guys, don't get too excited. It's not like we're going to start cutting rates tomorrow.
Very good. Please stay with us with futures at -25. The VIX out a large stick 22.76. On television and radio, this is Bloomberg. Good morning.